Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, November 25th, 8:47 a.m., and we are here today to analyze the global capital equity markets. Folks, this is one of those days where you wake up. It's one of those days where you wake up and you're like, oh, things are not just green. Things are bright, flashing green. And we had a preview of this last night in the overnight markets. We saw futures that were up pretty dramatically. I mean, up 1% on small caps, 0.5% on the NASDAQ and the S&P 500. So you have those futures showing some strong momentum, and that is followed into the broader equity markets. You know, there's the scene from Wolf of Wall Street, which I haven't watched in like 2 years. I need to watch that movie again. Where Leonardo DiCaprio's on the phone with the guy he's trying to sell these pink sheet stocks to, and he's like, the only regret you're gonna have is that you didn't buy more. I think that's what everyone's feeling right now looking at some of these stocks. The only regret you have is you didn't buy more, because in this type of a market you can see some momentum. Robinhood, $39 in the pre-markets. I think we hit 39.25 or something at one point. Right now, 39.07, up 6.6%. They got upgraded by Morgan Stanley to $55, up from $24. That is more than a doubling of a price target increase by Morgan Stanley, because they believe there's going to be more momentum. We'll talk more about Robinhood in just a little bit. $39 in the pre-market, 39.08 currently right now. Then you've got Palantir, which not only got upgraded from 55 to 75 last night by Dan Ives. This morning, I wake up and I'm like, all right, I think Palantir will be up. You know, Dan Ives is an important name. He has a lot of influence. His name matters. People think about Dan Ives a lot. Whatever he says, people listen. Not just Dan Ives, Mariana from Bank of America. She says, yeah, this sucker's going to $75. And that right there solidified, in my opinion. There's going to be a lot of people this morning saying, you know what, Dan is Dan. He just throws out numbers. You can't really trust him, yada, yada. I think a lot of those people are, I think some of those people, I understand their sentiment here, but I ultimately think that's an incorrect way to sort of like conceptualize how Dan analyzes stocks. But now you can't say anything when Bank of America is on board, because Bank of America is also qualitative and quantitative in and of itself. When you have two analysts that have been analyzing Palantir since the teens, they've been the only two people that have actually been bullish on Palantir since 13, 14, 15 bucks. If they're saying both of them, 55 to 75, you have a bit of unison in terms of how the analysts, at least on the bullish side, are thinking of Palantir. And that is something that you can't deny, even if you might not love Dan Ives as an analyst. Or may not love Bank of America as an analyst. The point is, if both of them are agreeing, you're starting to see some momentum from the institutional side on Palantir. The other thing that's really important about Palantir, we'll talk about MicroStrategy in a second. We got a lot of headlines right now. MicroStrategy bought another 55,000 Bitcoin. The other thing that makes me feel really excited about these price target upgrades is that I feel less insane trying to justify Palantir's valuation. Because you guys know, every day on the stream, I say I can't justify it through the numbers, but there's a lot of other ways to justify it. And then we go through the intellectual gymnastics we go through to try to justify Palantir. Well, now you got Dan, who, his basic analysis around Palantir has been, and he's talked about them this morning, we'll listen to it in a second, is use cases, which, some people might think, oh, well, that's not enough analysis. Yeah, well, that's more analysis than any of these other analysts are doing in terms of like actually talking to the customers using Palantir, which is, it's kind of keep it simple, stupid. There's a lot of people that using Palantir that get more use cases. Dan Ives says, all right, the stock's going to be more valuable. And then you got Mariana saying it's going to be 75 as well. So I think the institutional side is justifying a $150 billion market cap currently. Numerically, can you still justify it? No, in my opinion. You still can't justify numerically. But then again, we all know not a lot of stocks have to be justified numerically, especially if they're once-in-a-lifetime generational companies. And the fact that Mariana and Dan Ives have gone on this train means that they're pretty excited for Palantir. $67.18 in the pre-markets, up 4.3%. This is a new all-time high for Palantir. Here's another reason why Karp selling wasn't a big deal. He was selling to the institutions. I think it's more than obvious now, if Palantir is up after Karp sold close to a couple $2 billion over the past month, that retail did not buy those $2 billion worth of his shares. It was the toots, because tomorrow Palantir is going to be listed on the NASDAQ exchange, and then hopefully in December they get bounced into the NASDAQ 100 QQQ ETF, which would be incredible. But it does seem like the reason the stock is up right now is because the toots just wanted his shares, and he's happy to sell it at $146 billion. They're happy to buy it at $146 billion because they think it is going higher. So that's what we got right now in the context of Palantir. Tesla's up 2.3%. MicroStrategy, they just bought another 55,000 Bitcoin. We'll talk about that in a second. They're up 4.3%. Grab is up 3.16%. Hims is up 3.7%. Energy Transfer is up. TFC is up 1%. Dell is up 2.26%. Walgreens is up 1%. You got Bitcoin kind of flat on the day, but some of the other stocks around Bitcoin are going up. ELF is up 4%. You got Marathon, I believe that's up 4%. Marathon right here up 5.57%, $27.48. Amazon's up 1.2%. Apple's up 1%. You got Altria Group up about 20 bips. You got CleanSpark up 2%. Qs are up 1%. Rocket Lab is up 9%, $25.28. I don't know why Rocket Lab is up other than the fact that like it's participating in this rally. I don't think there's any like specific news, but like when you think about a growth stock momentous based rally, Rocket Lab is there because it's been one of the best growth stocks all year. S&P 500 at 599.81. Regional banks up 1.67%. Archer is up another 8%. Goodness gracious, 655. Congrats if you're an Archer. I mean, we were talking about this stock at $3 on the market open about 3 weeks ago. We had a couple people call in to talk about it. Again, backlog of $6 billion in purchase orders. Market cap's around $2.5 billion. We were talking about it when market cap was closer to $1.7 billion. So not too bad. Archer getting a lot of love. Is Joby up with it? Joby is up with it as well. 5%. The eVTOL names are getting some excitement. Robinhood right here, $39.03. MicroStrategy right here at $438.59. So what did MicroStrategy do this morning? Well, they bought some more Bitcoin. MicroStrategy has now bought 55,500 Bitcoin at an average price of 97,682 for Bitcoin. I did see the Macy's news. We'll talk about that in a second. Also, Sava is down 70% of the pre-markets. We'll talk about why they're down. So MicroStrategy right here, 386,700 Bitcoin at an average of 56,761. They now acquired 80,000 Bitcoin over the past 2 weeks. Additionally, with this 55,000 they acquired today, they have bought 130,000 Bitcoin in the past 4 weeks. They now have 386,000 at an average of 56,761. We'll talk more about MSTR. There is a price target upgrade that they got from a firm today. So I wanted to see kind of the sell side research on MicroStrategy, and what they said was actually pretty congruent with what Saylor's been saying about this whole Bitcoin treasury argument. So we'll talk about that, but MicroStrategy right here is currently up right now. Another thing, a headline on Robinhood right here. Here's another reason why they're up, or another reason why I think they're up. Dog with hat is finally on Robinhood. Dog with hat is finally on Robinhood. I'm showing the wrong thing. Here it is. Dog with hat now available to trade on Robinhood crypto. This is the crypto that this is the crypto that I had a friend who threw like $500 into, and made like, I don't even want to say how much money, but he made a lot of money because he came in really, really early. This coin has a big community. It's a Solana-based meme coin, and I'm not buying it. I don't have any position in it, but right there, you can trade it on Robinhood. As you can see, over the past year, it is up 500%. The point is, you're going to get a lot of people that care about cryptocurrencies coming over to Robinhood now because they have these coins. And why do they have these coins? Because Gensler's not around to get them to say that you can't have these coins. Whether you like trading meme coins or not, there is a market for it. That's all I care about. Is there a market for it? And does Robinhood have the ability to offer that market? Just like if you want to trade on Trump or Harris, there's a market for it. Robinhood just has to say, hey, we offer it. You can take it or you cannot take it, but it is here. And as long as they have the opportunity to offer it, they have the opportunity to monetize that, which is also very important in the broader crypto ecosystem and for their crypto trading volume. So that's another big piece of news on Robinhood right now. And that's why it's getting some momentum here. It's the biggest Sol meme coin, correct. It is one of the biggest meme coins on Solana as well. And that is big for Robinhood. All right, so we talked about Robinhood. We'll read the price target increases in a bit, but Robinhood got upgraded to 55. MicroStrategy got upgraded to 501. We'll read that in a bit. Palantir got upgraded to 75 across the board. Last night on the Sunday show, I talked real quick about the NHS and using Palantir. It's working. I will have a video that goes further in depth on it later today. But the NHS is seeing real results from Palantir in a variety of different hospitals or trusts, as the UK calls them, that are using Palantir software. And so we'll talk about this a little bit more on Daily Palantir later today, but we are seeing the momentum around institutional analysts seeing Palantir actually has value. And as a result of that, they are giving Palantir the premium. Here's Dan Ives on his Palantir upgrade and his broader software call now that we are in the age of the applications of AI.
Is it and why? Fire. Because I think this is a tech market that's going to be on fire. Not just for going into the end of the year this week, but what I believe right now, this AI revolution, it's hitting its next phase And I think this is just still the start of a fourth industrial revolution.
All right, still the start, but you always say it's 9 o'clock. It's got to be 9:30.
No, I actually said it now. It's 9:30 to 10 p.m. in the AI party. That goes to 4 a.m.
All right, so you have a number of upgrades in the space, specifically in the software space when it comes to AI. One of them is Snowflake. The other one's actually Elastic. We've been fortunate enough to have the CEO on the show. Kind of a broad base play. They do cloud, they do security as well. Why these two names?
Look, I think, and we've talked about a lot here on the show, now the second derivative, the software piece of AI is here. I think in 2025, that's going to be the key. You look at Elastic, Snowflake, names like MongoDB, they're the ones now that follow names like Palantir in terms of the software, the use cases. I believe the software AI age is now here. 2025, that's going to be front and center. That's why we upgrade those names.
All right, so both of those names have recently had earnings, actually. We're going to show the charts. Big jump. Snowflake's up over 25% since earnings. Elastic's up over 20% since earnings. What's going to push them even higher? I mean, they've had big spikes post-earnings. What else is going to happen that's going to be another catalyst?
That's just the appetizer in terms of where I believe these stocks are going. Because now the consumption model, what's happening across enterprise AI, obviously it starts with Godfather of AI, Jensen, NVIDIA. But now you look at the consumption piece, these LLM models, what you're going to start to see, I believe earnings and overall growth is being underestimated potentially by 15, 20% over the next few years. That's why you look at names like Snowflake, Elastic, Mongo. It all starts, obviously, with Messi of AI, Palantir, but this software phase is here, and it's just the beginning.
All right. So how does the idea of bond yields play a part of this? I want to ask you, probably back in 2022, we were talking a lot about bond yields. We're talking about the stronger dollar. In fact, right now, the dollar's even higher than it was back in June of 2022 when Microsoft warned, when Salesforce warned. How do those things play a factor in this tech trade?
Well, look, on currency, clearly that's been, that could be a headwind. I think the difference now is that a lot of that's factored into guidance. And we got to see if that continues in terms of dollar strength. But we're in a much different situation today relative to, I think, what we're seeing from a demand perspective. That tightening environment that really actually was a big hurdle in terms of software, we're seeing the opposite of it because of where this AI revolution plays. So I think even though you could have some currency headwinds, it is not getting in the way of what I believe is we're going to be talking about NASDAQ 20,000. And I believe in the next 2 years, NASDAQ 25,000 is something that we'll be talking about.
So again, your picks for us today are Snowflake and Elastic. I also want to talk about deregulation, the idea of some changes when it comes to the FTC and other areas that are regulators. Does that help either one of these names, or are they neutral to that?
Well, I think it's actually bullish because in our view, with Khan going to be out, FTC, this is going to be significant in terms of deal making. I think these are companies that are going to go on the offensive. And then on the other hand, you're just going to have massive M&A from strategic as well as on the financial M&A side. And that's why software has underperformed. But if you look in 2025, I think a year from now, we sit here and we're like, software is fire. Because this is just the start of what I view, 9:30, 10 p.m. is the AI revolution. We're talking about $2 trillion of AI CapEx. Now software, they were on the velvet ropes behind NVIDIA, Microsoft, the hyperscalers. Software is like, let us into the party. Party's here.
The party's here, okay. We get to our mystery chart. It was Palantir. So Palantir, having a huge year so far, and you just raised your price target on Palantir. So the street's at about $37. You're at $75. This stock's had a big run up. What's going to continue to move this higher?
Look, and the haters will continue to hate, as we know, in terms of the bears on Palantir. They are still underestimating when it comes to the software, the use cases. There's no product out there that matches what I believe what Karp and the team have done at AIP. So I think the enterprise piece, we're talking about something that could ultimately be billions of revenue. So when you actually look at what this means, $75, you're like, oh, it's expensive. I look out 3-4 years from now, could Palantir be the next Oracle, the next Salesforce, the next SAP? That's what I think we're talking about. And that's why, look, the bears will come out of hibernation, talk about valuation, just to start what I view for the Messi of AI.
All right, there you go. That was our boy Dan with a $75 price target on Palantir. Look, at its core, again, I think all of us agree it's expensive. At $75, if the growth rate doesn't increase dramatically, it will be expensive. But he has a hell of a point. In the next 4 years, if you think the thematic of AI gets larger and larger, and NVIDIA earnings showed that it's not slowing down, and you believe that the software applications of AI have to finally start showing a use case, because again, I've said this for the past couple months, but if there is not a Palantir, if there is not an actual enterprise software application of AI, NVIDIA goes to zero. And I mean that hyperbolically, but what I'm essentially saying is that you can't have these GPUs get better and better and better if there's no purpose for the GPUs. If the LLMs don't get better, if then there's not an operational workflow utilizing the LLM to actually drive better staffing, better scheduling, better oil, better ways to find drilling sites for oil, right? Better effective drilling of oil so that you can actually have better margins. Like all of these use cases need to be operationalized in some way, which means Palantir has to win for NVIDIA to even matter long-term, in my opinion, right? At least the enterprise AI application, which is a big part of what NVIDIA's TAM is going after in terms of creating new models to implement into the enterprise. You have to have something like Palantir win. I think so. I think that's what Dan is saying. I think Dan is essentially saying, yeah, we think that's going to win, and we think that's going to be a pretty big deal. Here is what Bank of America said on Palantir. Bobby, thank you for the $10 super chat. Appreciate that, Bobby. Thank you for that $10 super chat. And Torben, thank you for becoming a channel member. Really appreciate that as well. Thank you all for being here today. All right, so here's what Mariana said. By the way, I think a lot of you guys know I had a chance to meet Mariana. She is an incredible woman, incredibly smart. And the reason she understood Palantir before JP Morgan and all these guys is because she's a defense analyst, not just a software analyst. And when you put those two together, you get a company like Palantir that is really special to analyze. And as a result, she's been on this story since the beginning. So here's what she said. We think Palantir's penetration in both government and commercial applications is in the early innings. The incremental value adding use cases and increased interoperability are critical for continued penetration and upselling opportunities. We raise our price target to 75 from 55 on accelerated US growth and widening competitive moat. I think more so than anything, they're upgrading because they think that moat is getting bigger and bigger, and it's going to be just harder to compete with it. Raising EV sales to a multiple from 1.2x from 1x, software has become a critical asset in the industrial production, enabling automation, data analysis, real-time monitoring, and process control. Software presents 17% of U.S. non-residential private fixed investments versus 11% in 2005. So again, making that same argument Dan was making about the broader software sector catering at a higher rate, which would lead to people getting more excited about something like a Palantir if they are continuing to invest in software. We think Palantir is poised to dominate as companies turn to use software and AI to grow margins rather than through scale with fixed assets. The complexity of Palantir's ontology is invaluable to operationalize Gen AI as it embraces the security, governance, and data robustness challenges. Even with the surge of new commercial customers, partners, and distribution channels, we see a long runway ahead. We raise our next 3-year commercial growth target from 32% to 34% for Palantir. And there you go. That's what Bank of America had to say. Now, one argument she says right here at the end of the note that says, we think Palantir is poised to dominate as companies turn to use software and AI to grow margins rather than through scale with fixed assets. I think that's also a big deal. I think a lot of companies are going to start realizing, hey, we might not be able to grow top line as much as we were able to do in the past, but we can grow our margins because we can get more efficient, more productive, yada, yada. And that can increase earnings growth. And price to earnings multiples are based on how many earnings per share are you guys actually doing. And if you increase earnings because you increase margins because you invest in something like Palantir, your stock theoretically or your company's value should go up, which is sort of the transformational value that Palantir is saying that they can offer to the enterprise. And now, if Palantir can just compound to 40%, I know it's going to be hard to get there, but if we get from 30 to 35 to 40, maybe by the end of 2025, early 2026, it's game over, dude. There's not many software companies growing at these levels that are also actually transformational and have the leadership behind it to have a vision for the next decade. And I think Palantir has it. And that's why it's exciting right now. Steve says, Rocket Lab deployed satellites 2 consecutive days in 2 different hemispheres. Big deal. Okay, so I did not know that. And that is probably why Rocket Lab is up right now, along with the fact that the market's doing well. Rocket Lab right here, up 11%, 25.96. Again, this is one of those stories where it's like, it's just ran away from you. It's just went from 7 to 10 to 12 to 13. You would think it almost reminds me of Palantir to an extent. It's running away from people, and it is executing at a very high level. So the deployment of satellites for 2 consecutive days in 2 different hemispheres is a very big deal. Street's giving Rocket Lab some love right now, and we are seeing some momentum. Bashan Lawrence, thank you for becoming a channel member. Really appreciate the Bashan. Thank you for being here. And Alex Rodriguez, thank you for the $1 super chat. Appreciate you being here as well. Rango says, market is valuing Palantir on earnings, not on sales. That's what valuation gurus are getting wrong. I would agree, because on a price to sales basis, Palantir is going to open up at over 60 times. Sorry, it's already at 67. times price to sales. So it's going to open up even higher than 67, probably closer to 70. Look, paying 70 times price to sales, yeah, it's insane. There's no way I can justify that. However, if you believe those adjusted operating income margins are going up and their actual earnings growth gets better as well, and the implication of their earnings growth for other companies gets better as well, then, maybe there is a way to justify Palantir numerically that's different. But even if you do that, look, I think the numbers are hard, right? Just because the growth is not there yet. This is a story that is being valued on its future growth. And I know that's like every company, but Palantir, even to a more extent, it's being valued on their ability to massively grow into this AI TAM. They've shown, they haven't given you any reason to think they're not going to grow into the TAM. Let's put it like that. Palantir hasn't given any reason to show you they're not going to grow into that TAM. And until they do, I think the stock continues to do well. If they have a crappy quarter, which that happens to companies sometimes, then maybe we get a pullback. But as of now, I don't think there's necessarily a reason why it has to get a pullback if they continue to show the growth. So that's what we got going on right now in the context of Palantir. Now, look, real quick, everything is up right now in the pre-markets. I would not be surprised to see a little bit of a dippy dip as soon as the market opens. You got Robinhood at 38.98. You got Palantir at 67.18. We've seen this story before. Things are super green pre-market. And then as the market opens, you take a little bit of a dip. However, that dip ends up being short-lived because people end up buying it. And so I think we could open at 9:30, have a little bit of a sell-off, but throughout the day, it seems like the market wants to get more momentum. I mean, this type of green in the pre-markets after NVIDIA earnings seems like the market is ready for an end-of-year run, given they don't really see the bear case going into the end of the year as markets continue to do well. Also, Sofi, we didn't even talk about Sofi. Sofi, I believe, is above $16, which is just incredible. Sofi right here now looks like, yeah, look at this, 1606. Sofi looks like it wants 20 by the end of the year. It looks like it wants 20 by the end of the year. The market is closed on Thursday. It is open till 1 p.m. on Friday. So we'll have a show on Friday, no show on Thursday. I think I'll have a separate pod with Steve on Thursday. We'll do like a little Thanksgiving special around dividends. So we'll talk about that. But yeah, the market is closed on Thursday. Rango, what's your graph thesis? Real quick, graph thesis is this chart has consolidated for about 3 years from $2 to $5. They are now profitable. They're growing EBITDA margins. They're buying back their shares. They have better free cash flow. All of these are up and to the right. And the general emerging markets trend to me is exciting. Grab is like the Uber of Southeast Asia, to put it lightly. And from that perspective, I think the next 2 years, we're going to see continued margin expansion, continued growth, continued buybacks, and continued top-level growth. The institutions are getting excited about it. It's starting to feel less like a penny stock right now. $20 billion market cap. Morgan Stanley gave it an $8 price target. So I think in the next year, Grab is closer to 10. I think that's possible. And that's kind of the thesis right now on Grab. All right, SoFi 16, Rocket Lab 25.89, Palantir 67.19. You got the Dow Jones up a little bit right now. Where is Salesforce? Let's look at the software names because Dan was talking about software, and then we'll get a little bit more into crypto. So software right now, yeah, green across the board. Oracle's up 1%, Confluence up 2%, Snowflake up 3.79%, Datadog up 1.75%, CrowdStrike at 376, GitLab's up, Twilio's up, Intuit's up, Zscaler's up, Adobe's up, Mongo's up, Atlassian is up, and Palantir is obviously up. If you want to get exposure to software, but you don't want to buy an individual software name, IGV, that is the software sector that you want to look at. That's the software sector ETF. That ETF, I didn't know this until last night. That ETF is up 35% year to date, probably getting closer to 37 year to date as the market opens. Look at that. 35% year to date. And Palantir now in the weighting of this ETF, I believe, is either number 1 or number 2. Let me check real quick. Palantir's weighting in IGV. By the way, a lot of other ETFs are buying Palantir, particularly defense ETFs. I learned about a couple this morning that are buying Palantir. It's not just S&P. It's a lot of other third-party kind of derivative ETFs that are much smaller that are allocating to Palantir and putting that in their fund. Palantir is number 1, 2, 3, 4, 5, 6, 8. Number 8 in IGV by holding. So Salesforce is number 1. Then you got ServiceNow, Adobe, Palo Alto, Oracle, Microsoft, Palantir, Cadence Design Systems. So you got Palantir as number 8. So it's in the top 10, which is pretty damn incredible. And that's good because the more these ETFs continue to buy Palantir, the more retail gets support by the institutional guys that are loading up on Palantir right now. So that's what we got there. Okay, so let's move on to some crypto stuff. Well, first, before crypto, 2 charts that I want to show you guys that I think is really important. Number 1, so we showed this last night, but it's a hell of a chart. $448 billion has entered into the equity markets in 2024. Now, why does this matter? Well, it's the highest amount of inflows the stock market has seen in 1 year ever, going back to 1950, when a lot of the records started being kept track of. 448 billion is the most we've ever seen in a year. I mean, this is a record year for the stock market. If you have not been invested in the stock market this year, you have not participated in the upside, which is why it's just so important to be in the stock market, because you have these years after crappy years like 2022 where things can get really, really strong. And this is more than 2021. 2021, we had 400 billion, and we still have 1 month left of 2024. So 2024 is more than 2021. We still have 1 month left, and it is more than 2022 and 2023 combined. There is a lot of momentum in the broader stock market in terms of inflows. And then here's another chart I wanted to show everybody. When you have a bull market 2 years in a row, meaning up 20%, which in this case was 2023 and 2024, does the next year, does that third year of that three-peat, does it get bearish? Historically, this chart right here says no. We averaged 12% on the third year, which is, I mean, pretty damn incredible. The only 2 years where we were actually red on the third year was 1977 and then the year 2000. After that, if you've had 2 good years back-to-back defined as up 20% at least in year 1 and year 2, the third year tends to be up 12%. That would put the S&P 500 closer to like 67, 6,600. And you're getting some Wall Street firms kind of come out with that price target right now, which makes the argument that that could actually be relatively bullish. And so that's what we got going on right now. And, markets are seeming to basically say, hey, we do not think this market's necessarily going lower. We don't think it has to go lower. We think it's actually a lot more exciting right now. Okay, let's take a look at SAVA. So this thing is getting hit really badly right now in the pre-markets. SAVA, Cassava Science, is down 82%, which is nasty. It was down 17% on Friday. If anyone took a short on this, you have done very well. I believe they not only failed their drugs in trial today, but there's rumors out there that the drugs were never real, that it was all fake. It was all a sham. So as a result, you're getting a lot of people saying, all right, well, this was never real. So at that point, we got it. Yeah, that's so I'm still doing research on this one, trying to get the exact thoughts. But from what I'm seeing, it looks like there were never real drugs in the first place in this company, outside of them failing the FDA tests. Some of you guys might know in the chat as well. Shkreli did nail it. Yes, Martin Shkreli, the guy who went to jail for like raising prices on his drugs. He is like a big biotech guy. He said that this thing was a fraud, and it looks like he was right. And I don't know if he was short publicly. I think he was probably short, or at least had some puts on it. This bad boy down 81%. I don't know what kind of saves it when the market opens. I think it could go down even more. I don't know who would be buying after they've been found to be lying about their drugs, but this is the risk of investing in biotech. And this is what ends up happening if it ends up not working out as well. So yeah, you got Sava right here being accused of fraud. They are down 81% of the pre-market. Sofi right here up 3.27%. Palantir 4.3%, 67.12. Robinhood 7% up, 39.28 on Robinhood. We bought into strength on Robinhood last week. I bought at 35.45 and then at 36.07. So last week we were buying into strength. The strength looks real. The momentum is here. I could see them coming back down to 36.37, but up 7% on a price target increase by Morgan Stanley seems like you have multiple industry analysts basically saying that, hey, we think Robinhood should be into the 50s, which would be just incredible, because Bernstein was the only one that said it last week. Real quick on Robinhood, this is what Morgan Stanley said today. Revenue growth looks stronger post-election, driven by sustained retail trading, broader support for crypto, revived animal spirits, and increased M&A activity. Hood is executing on its plan to broaden its offerings. They did that with listing WIF today, the crypto coin. Capture more wallet share and expand its TAM, highlighted by the acquisition of an RIA custody platform, which is going to bring over $40 billion in assets to the platform that they only paid $300 million to be able to get. While shares are up over 100% year to date, we see further upside due to a discounted valuation, a faster pace of new initiatives, and post-election market dynamics likely supporting revenues into 2025. This environment should also shift focus to Hood's long-term potential. Robinhood on December 4th is going to have their first investor day. I will be there. And so I will definitely get you guys some content from that investor day. But I think that investor day is also very important because they're basically becoming a grown-up company now. And they're, telling to Wall Street, hey, here's our 10-year vision. And I think as a result, if they announce anything exciting there, Wall Street will get pretty excited for what we're seeing for Robinhood. So pretty incredible, 40 does look like it's possible, dude. We said that last week. 40 looks like it's possible. And again, at 40, they would still, with $5 billion cash, you would still be trading at like a 35 to 36 billion enterprise value. It's not the same risk reward that it was before, but I still feel like, it's not horrible. It's just given all the catalysts that we see right now, I'm thinking about like, all right, if the street's pricing it for growth, what growth do I see in 2025? And we see a ton of growth. And that brings us into the next discussion. Where is the macro bull case for 2025? I would like to pose this question to the chat. I posed it last night on the Sunday show. Curious what people have to say. Where is the bear case for 2025? And I think there's a couple of them that I'm going to run through. But from what we're seeing in terms of just the tech sector, you got Dan Ives saying it's going to be time for software. You've got Tesla probably going to start rolling out things with humanoid robotics. There's a lot of humanoid robotics startups that are starting to ramp up in 2025. That's another application of AI. You got NVIDIA ramping up Blackwell. That's not going away anytime soon. You've got the eVTOL companies like Joby and Archer getting real purchase orders. That's another vertical that's expanding. You got oil that's nicely in this $70 range, which means input costs across the entire economy are down. You would think oil looks like we're headed for a recession, but actually it's just based on supply and demand dynamics. And that is why oil is down, which is great because oil being down is great for airlines, cruise lines, everything, because everything is indirectly affected by oil. The only bear case I am realistically seeing is inflation. And that inflation would either come from a massive black swan event in terms of a geopolitical attack or some type of invasion or anything that could happen geopolitically that would be bad. Or Trump's tariffs being so awful that it creates like massive inflation. The geopolitical stuff, I don't even think we can factor into our accounts because by definition that could happen and no one's expecting it. The tariffs, again, here's my thought on this. I think Trump's using it as a campaign and a tool, as a negotiation tactic, and there will be some level of tariffs. I don't know if it's going to be so widespread to the point where inflation comes back to 5%. Inflation right now at 2.6%. Next CPI report, we need to make sure inflation kind of stays in that 2.6 to 2.7% range. If that's the case, where is the bear case? Like, where is the definitive bear case where you're like, yeah, I should I should really think for a second before I can continue to deploy. And there is a hell of an argument for valuations being expensive because yes, obviously the S&P 500 is going to be trading at, I think 23, 24 times, which is expensive. But if earnings growth can live up to the hype, then that is where I think the market continues to get some momentum. Here's Stephanie Link. Let's hear her perspectives on this, and then we will keep going from there.
We had a little bit warmer inflation. We had geopolitical issues the tensions increase. And yet we have an Atlanta Fed tracker GDP number. The most latest number is at 2.6%. And oh, by the way, the S&P 500 is up 3.9% in that period of time. So we got through a lot of stuff. And I think that there was a lot of unknowns and uncertainties. And now we know those things. And that's a good thing. And I think that is setting us up well between now and the end of the year for a continued rally.
Steph, but that would be the bullish case, and that would be the equities case. The bond market, yes, I think, might be flashing red. I would argue the oil market would tell you we're in a recession or something is happening. I mean, there's sort of these very interesting cross currents right now.
Yeah. Yeah, no, I think the fixed income market is actually telling you that we are going to see a little bit higher growth under the Trump administration. And by the way, as I mentioned, we're already seeing pretty good growth. 2.6% is well above trend. But I think the bond market's also saying, well, if you have that better growth, you're going to have a little bit more inflation. And we are seeing a little bit higher inflation. And when we get core CPI and PPI last week or 2 weeks ago, that was actually with 3 handles. So it was pretty elevated. I don't think we're at runaway inflation, Andrew, but I think we're probably going to see a little bit higher inflation. The oil market.
And if that's the case, and we're going to see higher inflation, can we normalize it? We had Goolsbee last week said we are not going to change our 2% target. He's pretty adamant about that. I think Jay Powell feels the same, which means could there be a risk, like a legitimate risk, where the Fed in December says we're not cutting because we're afraid about inflation? Now, granted, wherever the markets are, we would probably see a little bit of a pullback, but how bad of a pullback it is going to be in question. But that, I think, is one of the bear cases towards the end of the year. Do we actually get that rate cut or not?
Market, I think that's a function of China, to be honest with you. And we got the China stimulus, so that should actually hopefully stabilize the oil market. But we have to see what's going to happen under the Trump administration as well. And maybe that's what the market is looking forward at in that.
So given how far the market has run, just even the past month and a half, 2 months now, how much more does it have to run? Does it have to run? Is there a pullback? And if so, what are you buying?
I mean, I think there's always a chance of a pullback, and we're up 25% year to date. The long-term total return average is 7.7% for the S&P 500. It's about 3% in the fixed income market. So we're well above what the average is. So sure, we can see a pullback, but I don't really see one between now and the end of the year. We have $6.4 trillion of money in money markets, cash and money markets at this point in time. I don't think it's all going to come into the equity market, but I think that there is that fear of missing out. And I think you could see that happen. And I think at the end of the day, the most important thing, if you have about a 2.5% economy, you're growing mid-single digits in revenues, and you're growing probably something like 8 to 10% in earnings because you have that margin lift as well. So what do I like? I like the consumer. I thought we got some really good data last week. Target notwithstanding, that was the outlier, but Walmart, we had good numbers from Amazon in the retail world, Costco, the off-pricers. They're telling you that the consumer is continuing to spend, and that's good. And then on the manufacturing side, we've been talking all year long about AI, data center, power grid. I think you want to own Freeport-McMoRan because on the copper side, if you're going to build out the grid, you're going to need that. You're going to need copper for sure. You also had a call last week on an analyst day from Rockwell Automation, and they're talking about $1.8 trillion of mega projects around the world, and only 16% of those have started. So think about that trend, and that's a decade-long theme in my mind.
So ultimately what Stephanie's saying right there is that if there are these decade-long themes that exist in regards to just pure growth, data centers, energy, AI, etc., and then other verticals like eVTOL, Joby and Archer, and then humanoid robotics. We saw that great video from the great video from Figure last week. Kim Kardashian taking pictures with Optimus. Like, there's all these different industries popping up right in front of us that the broader global GDP growth should be higher. A lot of that innovation happening in the United States. And so when she makes the argument that I don't see a reason for a pullback between now until the end of the year, it's because the market's pricing a lot of that in. But going the next couple years, will there be pullbacks? Absolutely. Will there be legitimate 2022 years, 30% down bear markets? I don't know. And maybe I'm just saying this right now because the market's up right now, but like trying to be super objective of like, what is the bear case for the next couple years? I mean, the basic argument is that we stop seeing growth. Stop seeing growth in Palantir, stop seeing growth in NVIDIA, stop seeing growth in Google, Microsoft, etc. We've had almost 6 quarters in a row where there's just been incredible growth, or 8 quarters in a row. And it doesn't look like, as per now, that's slowing down yet right now. And you got a Trump administration that's ready to continue giving policies that are good for growth. So here's the CME Fed tool. 55% of investors think we're going to get a rate cut. 44% say we don't. It is getting close to that 50-40 or 50-50. And if it gets close to 50-50, then I think we have a legitimate fear that people should be at least factoring into their analysis around if we get that rate cut in December. A lot of it's going to depend on CPI and PPI. Increased spending in general is a bit more inflationary. So we have to kind of think, what is that going to look like? And how hawkish is the Fed going to be? But I know Jay Powell wants to get inflation down. He also doesn't want the labor market to collapse. Palantir 67.10 in the pre-markets. And if you don't cut rates, we were awfully close a couple months ago from it seeming like the labor markets were going to collapse. Now things seem a lot more better. But I think that's one thing he's going to care about. And I think he might give us that final rate cut this year just to make sure that labor markets are sustained strong. And then next year, if we can't get rid of inflation or just can't get down to that 2% target, maybe that's when the Fed gets a little bit more hawkish, which could make 2025 a little bad for the first couple months, right? But those dips that would be created if the long-term bull thesis is intact, if NVIDIA goes back to 100 right now, who's buying? I know I am, right? Like they're guiding for almost 40 billion in revenue next quarter, right? So it's like all these opportunities that are going to be appearing, I think will be taken advantage of. The question is just going to be if those opportunities actually happen. Marathon right here up 4%. Robinhood right here $39.09. MicroStrategy 433.55. Tesla up 2.7%, 362. Tesla looks like it wants closer to 400 by the end of the year the way it's running, but Tesla at 360, absolutely incredible. HIMS right here up 3.79%. Palantir at 67.03, and you got Robinhood right here at $39. Let's take a look at 2 other headlines that we got this market as well. So here's what Michael Saylor just tweeted on them buying a ton of Bitcoin. So he says, year to date, MicroStrategy's treasury operations delivered a Bitcoin yield of 59.3%, providing a net benefit of 112,000 Bitcoin to our shareholders, or 341 Bitcoin per day that they've bought since the beginning of 2024. At $100,000 per Bitcoin, that would equate to $11.2 billion for the year, or $34 million per day in profits, or paper profits, gained value against their Bitcoin. Now, what's even more interesting about this is that although MicroStrategy's stock has done well, their convertible notes, given that they convert at a 55% premium to the stock currently right now in the latest round of funding they did, that's going to be even more juicy for a lot of the shareholder or for a lot of the debt issuers that gave them those convertible notes, because they're expecting MicroStrategy to be way above 55% by 2029. So it's like a call option that MicroStrategy gets to 670 by 2029. That's why they gave them $3 billion with a 0% coupon. They think MicroStrategy is going to be way above 670 by 2029, and they're going to do way better than giving him, interest debt at even a 7% rate, because obviously that share price will do better. Canaccord Genuity is one of the first firms I saw today actually raise their MicroStrategy price target. So here's what they had to say as well. Introducing a new way to gauge MicroStrategy's value creation by focusing on Bitcoin accretion per share and the Bitcoin yield KPI, or key performance indicator. And that's what Saylor just talked about. Using both equity and convertible debt while leveraging its equity premium, MicroStrategy can grow its Bitcoin holdings faster than its share count is diluted. That right there kind of is the thesis. And obviously Bitcoin has to go up for that to make sense. The Bitcoin yield metric introduced earlier this year is reported during the Bitcoin updates and at the end of each quarter. Doubling Bitcoin per share is attractive, but when combined with gains in the spot price of Bitcoin, it creates substantial dollarized accretion per share that does not appear on the P&L. This dollarized Bitcoin accretion captures all elements of MicroStrategy's strategy, including the equity premium, Bitcoin spot price, accretive equity debt purchases, and Bitcoin yield KPI, aka MicroStrategy has become one of the largest Bitcoin treasuries, and the market is willing to give them a premium because of that. It's pretty incredible. It's pretty incredible. And I know it sounds crazy to a lot of people. If you listen to Saylor and you really try to understand what he's saying, I do think there is a market opportunity for what he's talking about. And obviously we're seeing that given the rise of the stock and the option traders that are getting into MicroStrategy. But that Bitcoin treasury, the market's assigning a premium to, and that premium is 4 or 5x. You assign a 34x premium to Microsoft. I know Microsoft's different than MicroStrategy, but if the street wants to give a premium to a product or service that they think is real and meaningful, like a Bitcoin treasury, then that's why you have MicroStrategy right here, currently at 4% of the pre-markets at 439 right now. Okay, we got 2 minutes until the market opens. What do you guys think? Are you scared or excited? Scared or excited? What are you thinking? You scared of seeing all this green, or are you embracing it? Are you running from the light, or are you running into it? How are you thinking of this right now? Are you excited about this? Are you thinking of selling, taking some profits, getting some stuff off the table, or saying, nope, we're going higher? This is a bull market. Market catalysts are there, and it doesn't make too much sense to sell right now. Let's see what you guys are saying. Jed says, sorry, late to the show. Dad duties. Jed, thank you for being here, even though you had your dad duties. Appreciate it. We have a market that's doing very well. And Jed, I know you're into Rocket Lab, and that one is doing very well. Where's Rocket Lab right now as we get into the open? Rocket Lab is up 9%. Pretty amazing. Okay, I'm seeing a lot of excited. A little bit of scared. I think that's normal to be a little bit nervous right here. But nonetheless, the momentum is there. The excitement is there. You've got an administration that's ready to support growth. You've got earnings growth that has been phenomenal. Q3, we've analyzed every damn company on this show, at least most of them. They've all reported pretty damn good numbers. And now you got a market that is reflecting that. Ladies and gentlemen, 9:30 a.m. Thank you, everybody, for being here. Happy Monday. The stock market is now open. Wake your ass up. Here we go. $66.30 for Palantir, up 3% of the day. Palantir getting upgraded to $75 by Wedbush and Bank of America. $63.33 for Palantir, up 3%. Robinhood, $39.50. Oh my goodness. Up almost 8% on the day. Robinhood getting upgraded to $55 by Morgan Stanley and $51 by Bernstein last week. $39.35 on Robinhood, up 7%. Tesla, $360 is up 2%. MicroStrategy, $431 is up 2.4%. HIMS is up 6.7%. HIMS is pretty much bringing back everything they lost. They peaked at 30. Amazon said they're coming into the space. They went all the way to 17, right back at 26. Looks like the market does not care too much about Amazon getting into HIMS' space. Walgreens is up 3%. You got Dell that's up about 1%, now into the 140s at 145. TFC at 48. Energy Transfer at 19.18. HIMS at $27. Apple's at 231. Amazon back above 200. Elf up 2%. Altria Group at 56.89. You've got IGV up 1%. Salesforce is up 1%. Grab's up 0.3%. SoFi 15.99. SoFi did touch 16.09 right there below 16, but it looks like it wants 16 again. Robin at $39.39. Joby at 742. Palantir 66.35. Where is MSTR? MSTR is at 426. That's up about 1%. Where is Marathon? Marathon is 26.50. That is up 1.8% as well. Let's take a look at the Mag 7. Apple's up. Microsoft's up. Meta's up. Google's up. Amazon's up. Tesla's up. Freaking NVIDIA's down. NVIDIA's down. Somehow, NVIDIA is down. That's weird. We got to do some investigating around it. That's weird. It's about the fourth day in a row that NVIDIA goes red, but NVIDIA currently is red. Look, the lower it goes, the more attractive. I mean, their PE now is 50. That's pretty damn attractive for 94% growth. So we will see kind of where this NVIDIA story plays out. It did hit 152 last week. Right now, currently at 140, down about 1.3%. Tesla right here at 360. Let's look at some of the crypto names. We've got, wow, Robinhood 39.67. My goodness. My goodness. I think Robinhood wants 40. I'll check the resistance in a second. Everything in crypto is relatively green except the miners outside of Marathon. This is incredible, dude. Marathon is the only miner that's green. CleanSpark's a little bit green, but the other miners are down, and that's because Bitcoin's down, so that makes sense that they go down. But Marathon now is being perceived not as, you know, a miner, but rather as a Bitcoin treasury. Robinhood resistance at $40. We are looking at, it's going to be a lot. It's going to be a ton of shares. $40 we are looking at. 78,000. All right, that's not that crazy. 78,000. Not wild, but that is the resistance we're looking at for Robinhood to get into that 40. MicroStrategy at 427. Where is Palantir? Palantir right now is at, wow, 67.41. All right, and where's Rocket Lab? Let me check resistance on Palantir real quick. Rocket Lab, 25.20. Rocket Lab, 25.20, up 8%. Palantir, 67.60, up 5% on the day. Let's check 68 resistance for Palantir. Palantir 68 resistance is 4,000 shares. 4,000, how many? 4,459. There is no resistance to 68. If it wants to get to 68, I think we could get to 68. So let's just see. We got to get buy side pressure coming in. Archer is up 11% on the day, 611, or sorry, 670. Incredibles. Archer right here up 11%. Absolutely amazing for Archer. Sava's down 84%. So again, they were kind of exposed to being a fraud today with their drugs, down 84%. Volume is 29 million. Market cap is now at 194 million. That stock is down. Sofi healthily above 16 right here, breaking over 1602. Joby right here up 7% or 4% at 742. Robinhood at 39.29. Robinhood actually holding this $39 level, which is incredible. Street looks like it wants to take it to 40. Rocket Lab 24.97 and Palantir right here 67.80. Palantir wants 70. I mean, we can all tell Palantir wants 70. That's just a question of the buyers coming in. $154 billion market cap for Palantir. GameStop's up 2%. Enphase is up 5%. Enphase back into the 70s. Not bad. Enphase getting some love. Wix is up a little bit. Williams Simona is up another 2% today. Quantum Computing, QUBT, is up 22%. Where's Honest? I know a lot of you guys like Honest. Honest is up 4.2% at 850. Grab it at 511. Salesforce at 345. And then SoFi right here at 1588. Currently on the day. Even Target's getting a pump. Yeah, let's take a look at Target. Target last week got hit. Target right here got a pretty bullish market. Target is 129. All right, so the indices, the S&P 6,000. There you go. You got 6,000 on the S&P. On the Qs, you've got 509, not close to its close to its all-time high, but not there yet. And then IWM, I think you're past 242. 242.83 cents. There you go. We're looking at 243 for IWM. I mean, this tells you how the market's interpreting what's going on right now. Small caps are up, crypto's up, and Max 7 is up, but it's not up as much, which means we're seeing a little bit more breadth created in the market, which is really, really good because you want to see more breadth created in the broader market. SoundHound, this bad boy, is up 2%, 842. That's doing well right now. And then you got Palantir right here at 67.54, up about 5% on the days. Marathon and Microsoft just went, or not Microsoft, I keep saying MicroStrategy and Marathon just went red. Again, look, this is the volatility that people have to get used to with these Bitcoin treasuries because Bitcoin right now is down. It's at 97,000. You know, we were used to being it at 99,000. MicroStrategy and Marathon ran way more on Friday than Bitcoin ran. And so if Bitcoin goes down, you get a little bit of the premium getting taken off of these two stocks. So it's one of those things, again, these are not like real businesses, in my opinion, in the conventional sense. They are businesses, but they're businesses around creating a treasury for Bitcoin. And in the context of Marathon, also having a mining operation. So it's just the height of volatility that you have to deal with these two names. Rocket Lab 25.26, Palantir 67.67, and Hood at 39.16, up about 6.87% on the day. SMCI also, yeah, good day for SMCI. SoFi right here, 15.91. SMCI recovering from that $17 range that it was at when people thought they were going to get delisted. 36.80 right now on SMCI, up about 10% on the day. Pinterest is up, Snapchat is up, Reddit is up. CrowdStrike looks like it wants to get back to all-time highs, 376. This sucker was below 200 back on August 5th, and it was, you know, even lower when the when the whole incident broke out in July. It's making a pretty good recovery. Intuit at 642, NetApp at 124, Melia 2000, Celsius at 30. Celsius back in that $30 range. Goldman Sachs at 609. Wow, I think that's an all-time high for Goldman Sachs. That means financials should be doing great. Let's take a look at banks. Yeah, look at the left-hand side of my screen. Banks across the board, green. Insane. Barclays is up 3%. Nubank's up. PNC is up. HBC is up. JP Morgan's up. TFC is up. XLF is up. KRE is up. Regionals are up. Wells Fargo's up. SoFi is up. Bank of America is up. Dude, Warren Buffett sold, how much was it? I think 200 million shares or something of Bank of America, or 100 million, a decent amount of Bank of America at 41. Bank of America's at 47. Now, he still has a lot of Bank of America. He's owned Bank of America for a long time, so he's done well. But a lot of people felt that him selling was like financials doing bad, and Trump won. And now it looks like financials are going to be doing okay because there's going to be more M&A, more fees, more IPOs, everything in 2025. So financials seem to be in a good spot. That's why SoFi is getting some love right here at this $16 range currently right now as well. PayPal's above 88. Take a look at that. Yep, PayPal 88.60. Maybe PayPal touches that $90 range going into the end of the year. Where's HIMS? HIMS also up 11%. Dude, HIMS is basically, it was at $30 when Amazon announced they were coming in. If you bought the dip at 17, congrats. I mean, you have to have some conviction. You have to not care about Amazon, and you're up right now. You're up a lot. So HIMS right there from 17 to 28. Not bad at all. Where's Nike today? Let's take a look at this. Steve on Friday on the market close says he's starting to like Nike, 78.62. The main reasons is that they're a decent recovery play. They have a dividend, and their debt is not as high in terms of the amount of debt that Steve thought they had. So that's kind of his, I don't think he has a position yet, but he's coming to a bull case for Nike. At least it would explain why Bill Ackman's buying so much of it. Domino's Pizza right here, 460. If Buffett got in on that 413 to 420 dip back in July of Q3, then he is up right now, 460, up about 1.4% in the Domino's. QQQ at 510, IWM at 242, S&P 500 at 6,000 on the day. It's green, folks. It's green. Where's Google? Yes, where's Google? Google is 169. All right, so the street's buying it up. They don't care too much about the DOJ breakup, at least for today. They did care last week. It's a new day, a new week, and the street changed their mind, as they do every 5 seconds. And they're saying, yeah, we don't care that much about the DOJ trying to break them up because we don't think it's probably going to happen. So Google right here, 169.26, currently up on the day. What's happening to NVIDIA? Honestly, what is your guys' thesis? What do you think? Why do you think NVIDIA is going down? Why do you think NVIDIA is going down? What would you guys have to say? NVIDIA right here. NVIDIA the only one. NVIDIA is the only one not participating in this rally, bro, or at least on today's momentum. Now, it's crazy to say that because NVIDIA is up a lot this year, right? Like we have to always remember that. But still, markets maybe taking a little bit of money out of NVIDIA and going to some other names, which, by the way, is kind of healthy. It is healthy. I mean, look, you want the market to say, hey, we're going to sell off some NVIDIA and buy some small caps. You know, that just broadens the broader appeal of the stock market as more parts start to do well. Intel is close to securing an $8 billion grant from the Commerce Department. Just saw that headline. Intel is up 4%. Look at that. This is from the CHIPS Act. However, the grant amount has reportedly been reduced by $500 million amid doubts of Intel's ability to meet its commitments. Okay, so they're still going to get about $8 billion. I think they got $3 billion 2 weeks ago. So Intel is just milking it from that CHIPS Act. And Intel right here up 4% currently right now. NVIDIA is going up over time, but big money wants more. NVIDIA runs counter to Tesla. Yeah, I think that's fair. I think some big money is probably rotating some profits. I think some of you said it right now in the chat. You sold a little bit of NVIDIA, you bought a little bit into NVIDIA. So it makes sense. You're getting a little bit of a wash in terms of different people either taking profits or getting in. Doug says NVIDIA down because degens are literally just bored. That could also be another reason. Dude, the call option open interest volume for NVIDIA was insane. I think a lot of call option buyers got burned last week when the stock stayed flat. NVIDIA now below 140. And they're like, you know what? We can buy calls on other stuff. NVIDIA is not as exciting. So that might be a reason. Sachin, what's up? Thank you for being here. Sachin, by the way, your SoFi call has done very well. $15.94. Sachin was buying this sucker at $7-8, and it was a little bit of hell to deal with when it was flat for about 4 or 5 months, but now you have seen more than a doubling. Let's see where the options are for SoFi. Let's see how those are doing. These are up 370%. We are up 13 grand on SoFi. If it gets to 20 and we're up like 25 or 30 grand or something in like the next month, I don't know, bro. I feel like we might have to sell. But it's also one of those things where it's like, if it's going to be 20 soon and you believe 2026 they're going to execute or 2025 they're going to execute, then I think this thing just runs to 20. And if it runs to 20, then the good thing about a spread is when the long side of your spread, the $15 call I bought, and the short side of the spread, the $20 call that I sold short, if both of those are in the money, meaning let's say SoFi is like 23, it's just theta decay. You just wait, you just sit back and let the theta decay and both spreads eventually decay into their full value. And, we could get a 14x on SoFi. So let's see. They still have a lot of execution to do, but 1590 right here on SoFi at 1.92%. They have the thematic of banks doing very well. The thing I would hate in 2025 is for SoFi to collapse like 40% because they have a bad quarter. I just don't think they're going to have a crappy quarter. NVIDIA right here down 2%. Like Noto literally said he wants Republicans to win, right? Like he quite literally he was like, I want, like, this is when the stock was in the gutter. He was like, we need Republicans to win. He was like, I don't care about all this political shit. We need Republicans to win. We are a bank and we need better regulations or deregulations. And he got what he wanted. So I think given he got what he wanted, he's going to execute on it. And I think SoFi does well. Q's at 511. Wow, they're up 1%. S&P making above 6,000. Where is Palantir? Palantir 66.95, trying to get back to 67. Where is Hood? Hood is at 38.35. All right, so Hood getting a little bit of a dip right here from 39.74. That was to be expected. 38.33. If we can hold above 38, that would be really good for me. Up about 4% right now on Robinhood. MSTR is dumping, or that might be another reason Robinhood's down because Bitcoin's down. MSTR, yeah, there you go. MSTR down 5%. Bitcoin is down at 96,000. All right, so you're getting some sell side pressure on Bitcoin. That's also hurting some of these names. Marathon's probably getting hit right now as well. Yeah, Marathon down about 1.2%. And you got MicroStrategy down about 4% right here. I think we get 100K. I don't know when it happens, but I think it happens. I think we get 100K. I don't know when it happens, but I do think it will indeed happen. Sachin says, once I 3x'd on my calls, I sold 1/3, so capital is back for now. That's amazing. So you basically got your initial on SoFi, and now you can just kind of let it run and not have to worry too much about it. I think that makes a lot of sense. Archer is up. Yes, Archer is up currently right now. Archer's doing great. Hims is up 15%. Wow, guys. That's incredible. Guys, we will also have Sachin on the show probably next week. He's just resolving some family stuff right now, personal stuff, but he'll be on probably within the next 2 weeks. He'll be on the show, and we'll get him on the market open and get all of his thoughts on what's going on. Sachin, on the market close on Friday, for those that were there, we were watching some old Palantir weekly clips. And it was just so crazy. We were watching the clip where you said you went all in at $8 and like doubled down with margin. And it was wild because, now it's like Palantir's going up too fast. And at $8, it was like, can this thing even move 5 cents? It's just a totally different world we're in. Palantir getting upgraded by Dan Ives and Mariana to $75 a share today, which is not that far from 67. So if we get to 75, are they gonna raise it to 100? Like, it's pretty damn amazing. One thing is for sure, the highest paid analyst in regards to bonuses this year will be Dan Ives, because pretty much everything he has said has done well. And again, these analysts, they get paid on, to my understanding, the analysts get paid on bonuses. They're not allowed to own Palantir. They're not allowed to own Tesla. But if they say, hey, Tesla's going to 350, and then Tesla's at 170, and then their clients buy Tesla at 170, and Tesla goes to 350, they get a big, fat, juicy bonus. So Mariana is going to get that bonus. Dan Ives is going to get that bonus. And, if you listen to them, your bonus has been share appreciation on these stocks. Google right here back at 170. Not bad at all for Google. Google getting some love. Yeah, RGTI is also doing well today. This thing is up 70%. Rigidity Computing. So funnily enough, I know this company because Palantir invested in them in the SPAC 2021 time. Now, why are they up today 70%? I don't fully know. They did a $100 million at-the-money equity offering. Are they buying Bitcoin? How are they up 70% after doing an at-the-money offering? That's dilution. Why are they up 70%? I don't think they're buying Bitcoin. I think is this another quantum computing name? If this is another quantum computing name, then I think it's rising with the trend. But that is weird. They do an offering and they go up 70%. Oh, they just announced a collaboration with NVIDIA for a hybrid GPU quantum processing unit workflow for climate modeling. Huh. Okay, so they're using NVIDIA to get some love. NVIDIA's Nvidia can't use its own earnings to get some love right now. But all right, so Rigidity Computing, Palantir used to have a stake in these guys, up 70% at the money offering. It looks like they have some Nvidia collaboration. Another quantum computing name that's doing well, QUBT, also in the quantum sector, up 21%. IONQ is also up 6%. I mean, look, I know a lot of these are penny stocks and they're just getting to like the billions of market cap, but it does look like quantum computing is seeing excitement in the broader investing landscape. It does seem like people are excited for this vertical, which is just another vertical that's taking place going into 2025. Sachin says Palantir is in the upper echelon bound. It can hang here or go higher for now, but it has more downside than upside in my opinion. But given its momentum, you just can't take a risk on it. Yeah, I agree. Obviously, Palantir definitely has mathematically more downside given it's gone up a lot. But the fact that the upside is there and the fact that the momentum is there and the price targets are there and like the toots are there, and then you got the NASDAQ 100 exchange coming up tomorrow, and then potentially the bounce in the QQQ next month. Shorting Palantir to me is just tough, dude. Like it's just, and again, you had a lot of accounts on Twitter last week try to flex on how Palantir is the biggest bubble in the world. That is yet to be proven true, given Palantir's price action. And here's the thing, they're probably going to double down on their thesis that Palantir is the biggest bubble in the world. If that's the case, in my opinion, you got to double down on a short. You can't just say something's the biggest bubble in the world and not short it. But there's no way they're going to short it because they're too afraid. Most of them could not fathom shorting this company because you just don't know how they can continue to get more and more momentum. If you are not in Palantir yet but want to, where do you get in? I'm in, but seeing the dilemma when looking at HIMS or Hood, do I jump in or wait? I'll wait, but might miss it. Difficult choices. Yeah, it's tough, dude. It's tough. It's tough to try to figure out entry prices now after things have ran. And that's why I like selling puts, right? Because if you don't like Hood at 38, but you like it at 32, then at least you can have the opportunity to buy it if it gets there. And if not, you at least make some money. But I mean, price targets, a lot of people that are just getting an entry price, they're just buying it at the current price right now because they think the market's going higher in 2025, which is very possible. It's just hard to see, that's why when Hood had a dip last week, we bought the dip, right? When Hood went down almost 4-5%, we're like, all right, because you don't usually get these types of down days, especially on Hood, because it's not as volatile compared to MicroStrategy with Bitcoin. It's like a legit business that has a crypto catalyst. And those are opportunities that you take advantage of. Intel right here up 4% currently right now. Google at 169, Domino's at 463. Is Bitcoin tanking? Yeah, Bitcoin looks like it might go to 95, 97 bucks away from heading below 96,000. Honestly, I think a little bit of a needed pullback. You kind of need a Bitcoin to chill out a little bit, but I do think this dip gets bought over time. 100,000 by Thanksgiving would be awesome. If it does happen, I don't know if that would happen because people are going to be away from their phones, they're with family, etc. But looks like maybe some pre-Thanksgiving profits that people are taking currently right now. SMCI right here at 37.24, up about 12% on the day. Crossroads says, biggest bubble in the world, but I won't short it, is like biggest opportunity to buy a stock in the world, but I won't buy it. Yeah, I agree. If you think Palantir is the biggest bubble in the world, but you don't short it, it's basically saying something's an amazing buy. I love it, but you just won't buy it. It means you don't actually believe in it, right? If you don't if you think this is the best buy in the world and you don't buy it, you kind of don't really think it's the best buy in the world. Same thing with the biggest short. If you think it's the biggest bubble, you're not taking a short. You just don't believe that it can short. We talked about Grab. So if you go to the market close on Thursday, JC, I did a whole segment. Go to the chapters. We talked about Grab for like 25 minutes with someone who bought Grab in the $3 range. So go to the market close from Thursday. We talked about Grab, and you can look at that segment. Sailor's got market buys loaded for Thanksgiving. Goodness gracious, dude. Sailor also owns his own Bitcoin. Like he owns I think he bought 250 million worth of Bitcoin, I think in 2020. So that thing must be up a ton. And so his own personal Bitcoin should be doing pretty well. Oh, wow. We got some geopolitical news. Israel and Lebanon have agreed to the terms of an agreement to end the Israeli Hezbollah conflict. Boom. I mean, that could be another reason markets are doing well. This was at 9:01 a.m. I didn't even see this. This could be one of the reasons why the S&P is up. And this is probably Netanyahu trying to create good relationships with the Trump administration by giving him some victories right here, potentially, by potentially coming to an end to this. So that could be some good geopolitical conflicts or good geopolitical news in terms of conflicts not being as bad as they were before. And that could be helping right now. Palantir 66.91, trying to get back to 67. Robinhood at 38.39. And Sofi still trying to get back to 16, but currently right now at 15.75 at the moment. Archer's at 7:30. Yes, Archer is indeed at 7:30. Sachin says, a question FinTwit needs to ask: why has it become expensive instead of just trumping bubble? The insight is key, and it's very revealing about investor risk preference and appetite. Yeah, in the context of Palantir, and this is what I've been saying, right? The intellectual gymnastics I've been running through every day on the show to justify the valuation has been me trying to be humble about it, right? Because I think it takes a lot of arrogance to say something is overvalued, it's a bubble, and it's going to go to zero, or it's going to come down at least 50%. I think it takes a lot of humility to say, hey, I'm wrong on this. The street is obviously giving it a $150 billion valuation for something beyond the numbers. So let's try to figure out what's going on. Why is it up? And whether it's OpenAI's comp, whether it's new use cases, well, whatever it may be for Palantir, there is a reason for why the institutions are buying it here. Because I think it's become more than obvious at this point. The amount of times retail has texted me or said in the chat that they're selling Palantir or put it on Twitter, retail has sold Palantir. They have definitely not been a net buyer at 65 or even above 45, in my opinion. This is the toots. This is the big guys. And the big guys are saying they think Palantir is going to be a very special company into the future. I think they think it's going to $1 trillion. If they're buying it at 150 billion, I think they think Palantir is going to a freaking $1 trillion, and that's why they're buying it. Archer's up 18% on the day. Goodness gracious, $7.15. Absolutely incredible. Archer is getting some momentum. Where is gold? Is gold down on the day? Gold is down on the day. That's why the gold miners are down on the day. And Bitcoin, yeah, look at Bitcoin down 2%. So MicroStrategy should be below 400 right now. MicroStrategy 386. Nasty decline on MSTR. This is a good day to sell puts on MSTR. This is one of those days. If you were wanting to get puts on MSTR, you do it on a day where it's down, not on a day when it's up. MicroStrategy right here down 9%. Marathon also down about 4% right here. SMCI doing well. SMCI up 14%. Clean Spark down about 3%. And then Palantir right here is 66.27. Rocket Lab's going red? Really? Rocket Lab's going red? Oh, wow. Rocket Lab. Wow. 27 to 23. I mean, I think that's the entire market. We definitely have a lot of stocks selling off right now. And look, hey, I did say this right before we got into the open. I say it would not surprise me if we go red, because when you're that green in the pre-markets, you tend to take a little bit of a pullback. But the point is the fact that the investor appetite even exists to take Rocket Lab higher or MicroStrategy higher, Marathon, SMCI, et cetera, just means this is a broad market rally where you're seeing a lot of people get excited for what's going on with $6 trillion still on the sidelines, which is pretty incredible. Zoom has earnings today. What else has earnings today? So Zoom has earnings today. That's pretty much it. Tomorrow, Best Buy. I think Best Buy, their execution has been amazing. I think Best Buy can do well. Best Buy, Macy's, Dick's. That's a very important one. I really enjoy that store. Abercrombie & Fitch, A&F. That one's going to have earnings. And then Dell, CrowdStrike, HP, Workday, Autodesk, and Nutanix after hours. Wow. So tomorrow's a big one. We got Best Buy, Abercrombie, Macy's, Burlington, Dick's, and then Smuckers. I didn't even know that was a public company. Smuckers is a public company. What? SMJ? You mean the jam? Smuckers Jam is a public company? So they're reporting in the morning, and then after hours, you have all the software names and cybersecurity names. Smuckers, $113, $12 billion market cap. Smuckers, huh? Macy's is delayed. That's correct. Sorry, Macy's is delayed. That was the headline this morning. So Macy's is delaying their earnings. Let's check their stock. That's probably not the best for them. Macy's is down 4% right now. Okay. So Macy's is down. They are delaying their earnings, so we won't have Macy's tomorrow. How much is Smuckers up here today? Because if Smuckers up like 40%, then that's how we know this is a wild market. We're going to check together right now. Here we go. Here we go. All right. SMJ. Oh, sorry. SJM. Smuckers year to date. I'm going to press it with you guys for the first time. Here we go. Okay, it's down 12%. All right. If this was up 40%, like AI jelly, what's going on, bro? Smuckers right here. They have a dividend of 3.8%, market cap of $12 billion. Over the past year, they're up 2%. Past 5 years, they're up 8%. Okay, so this stock has not done that well. But you got a dividend, which I guess is good. So Smuckers. We'll cover Smuckers earnings. I've never covered Smuckers before. Calls on peanut butter and jelly sandwiches. Yeah, exactly. Why is everything down? Just profit taking? I think so. I think it ran up really hard in the pre-markets. You got people taking profits. But the fact that it ran up that hard means that people obviously have the money to deploy and are excited. Bitcoin right here at 96,000, trying to make a little recovery from 95,800. Fun fact, Smucker Company acquired Hostess Brands for $5.6 billion in a cash and stock deal in November 2023. I remember this headline. I forgot that it was the Smucker Company that did that. Dude, Hostess Brands are amazing. I think everyone across the world knows Hostess Brands, right? Everyone across the world knows this because my dad used to have a liquor store and we used to sell a ton of these. So we would have the vendors from Hostess come into the store and they would load up. I mean, look at these, bro. This is my childhood. Twinkies, cupcakes. Now I look at it and I'm like, okay, I don't want to eat any of this stuff. But like when I was a kid, this was, everyone has to remember this, right? Even if you're not in America, I feel like these are global products that existed. Wow, they bought them for $5.6 billion, huh? That's cool. You know, one of my dreams has always been to open up like a bakery or something. I would love to do that one day. I would love to diversify one day, take some gains from the stock market if things go well in the next 5-6 years, maybe the next decade. And I would want to open up a bakery because I have a sweet tooth. I have a big sweet tooth. I mean, I have chocolate, brownies. I love that stuff. It'd be super cool to open up a bakery and actually like sell, fun stuff that people would want to eat. Who knows? Maybe it turns into a real brand. Like all that stuff's cool. But the problem with like food is that like regulations on food is crazy, bro. And like, you have one thing that's messed up, you can get sued. It's like, that's the hard part with restaurants, but it is exciting stuff. Or you mean pay someone else to bake? Yeah, I would not be doing the baking. Okay, I would not be doing the baking. Like I'm not the best baker, but I can make some cereal. Okay, I'm not bad at making cereal. I'm like pretty damn good. The way I put the cereal before the milk is like, I think it's prophetic in some way. The way my cereal comes out, it's nice. IWM right here at 242, Q's at 508, S&P at 599, taking a little bit of a pullback. Salesforce 344, IGV 106, Sava still down 83% right here. Grab at 509, Tesla at 353. Yeah, everything's taking a little bit of a dip. Everyone's taking a little bit of a dippy dip. You guys say milk before cereal. So I was milk before cereal for the longest, and then I came to the revelation that it's actually cereal before milk. I think I came to that revelation 10 years ago. So I was late to the game, but milk before cereal I think is incorrect. I was doing that my whole childhood, and then one day I woke up and I was like, wait a second, let me put the cereal first. And then the way the milk floats up the cereal together, it is just, and it soaks into the cereal. Like there's a special technique with pouring the milk after the cereal, in my opinion. Mr. Lakeside, thank you for the $100 super chat. My family didn't agree with me buying Palantir at 2130. That's how I found your channel. Thanks for all your hard work and exceptional platform. I really appreciate that. Thank you for the $100 super chat. That is a lot of money. It means the world to me. Thank you for putting that super chat there. And yeah, your story is similar to a lot of other people that have reached out to me buying Palantir in the teens and in the 20s. It's worked out. It's worked out really well. It's so funny when Palantir was stuck at $20 for like 3 months, call this from like March to May. Every day my dad would come home and he's like, why isn't Palantir moving? And I'm like, I don't know, but we're going to buy more. I don't care. Like, it's just, and every day like, why isn't it moving? I'm like, I don't know. It's like, if it doesn't move, it's like a failure in his portfolio. I'm like, Dad, like stocks go up. Now he's like, why is it at 60, bro? Like, why is it moving so far? And I'm like, Dad, things go up and down. Like it is what it is. But it's been a hell of a story. 67.18 right now on Palantir, a hell of a story. Up 4% right now. We got Jeff in the chat up 535% on Palantir. Absolutely incredible. Absolutely incredible. Let's check some other names. DraftKings is down a little bit right now. SMCI is up 14%. So that's holding on. Archer is up 20% now. Goodness gracious. 727. Semis are all green except NVIDIA down 3%. TSM down 2.8%. And then Lam Research down 0.56%. So the semis are doing well besides NVIDIA. Tesla's going down as well. And the Max 7 is green, but it's kind of flat green. Yeah, Microsoft just went flat, or Microsoft just went red. NVIDIA just went red, and then Tesla just went red. Apple's at 232. That's incredible. The headline on Apple was that the AirPod Maxes are not getting a refresh. That was announced by Bloomberg yesterday, which is fair. I don't think they need to upgrade the AirPod Maxes, but I do like the product. I bought my own, and although the headphones are, in my opinion, pretty expensive at $600, they're still like, it's the best integrated headphones to use if you're using a Mac, iPad, iPhone, because it just switches between everything so seamlessly. But the fact that they're not upgrading the headphones I think to the market, it's signaling, where are these guys going to grow from? Like the iPhone is not growing as much as we thought it was. Apple Intelligence is a joke right now. Like it's a literal joke. It does nothing right now. The Vision Pro is a flop. And then they're not even upgrading the AirPod Maxes. So like, where's their growth coming from? Nonetheless, Apple's still going up. And that might just be passive index funds continuing to allocate to Apple right here at these levels at 232. It's been years since they upgraded the Max. Apple is a joke. Well, I think that the AirPod Max is, like, I agree, the best product Apple has made in the context of headphones. So I don't think they need to upgrade it. But the fact that they can't figure out how to upgrade it, I think is one of those things where it's like, all right, where is the R&D coming from for Apple? What are they going to do? 2374 right here on Rocket Lab, up about 2% of the day. Palantir just like hovering in that 67 range, not fully getting above it. But I think we do keep 66 today, up about 4% currently right now. Robinhood up 4% as well, 38.34 as the markets have opened. MicroStrategy making its way back to 400, down about 5% right now. Not bad, dude. Not bad at all. It's a hell of a market to open up. And we've got 1 week left. We got Thanksgiving left. And then that's it. We're getting into December. And then as we get into December, that is it for 2024. A couple of price target upgrades. Let me read these off. UBS raised Tesla to 226 from 197. They say, we urge investors to think about what one needs to believe to add Tesla positions at current levels. In our framework, the auto and energy business are worth $52 a share, which implies at current levels, everything else, Tesla, AI, Robotaxi, Optimus is being valued at $1 trillion. We understand that the market increasingly views Tesla as an AI play, however, rather than an EV player. However, when you value tangibly attribute to the auto business reaches the recent average of 70%, the stock tends to enter in a downward channel. So they have a sell rating on Tesla, but they upgraded it from 197 to 226. Raymond James upgrades Meta to 675, strong buy. They say Meta is poised for an improving generative AI monetization narrative in 2025 as we expect tailwinds, including recommendation model advancements to drive up engagement by a mid-single to a low-digit amount. We also believe engagement with Meta will increase to over 500 million monthly active users on their Meta AI product. Meta right here currently is at 566, up about 1.37%. So Tesla got a sell, Meta got an upgrade. Canaccord Genuity raised MicroStrategy to 510. We saw that. I think we have a couple of other raises. Oh, DA Davidson raised PG to 209 from 160. PG, what is this one again? Procter & Gamble. Yeah, Procter & Gamble, 178. They're citing China is going to be a tailwind for them as China stimulates because they have a business that's big in China. And then obviously we saw Bank of America raise Palantir from 55 to 75. Palantir right here currently at $67, right back above 67. Nvidia, all right, who's buying the Nvidia dip? Who's buying the Nvidia dip? 137.91. Can't say there's not a part of me that wants to nibble a little bit at Nvidia right here, down 2.8%. See, the problem with buying the dip right here is like, this would be like initiating a position for me. So the problem here is like, I would love it at 130 if it actually gets there. I mean, maybe selling puts on this is not horrible. I feel like 138 isn't that big of a dip though from 145. Like it's a relatively small dip. If we get into the 135s, then I think this is a real dip that the street's thinking of. But 130, I don't know. It doesn't feel as big of a dip. Some of you guys are saying you bought the dip. Bought the dip. Look, anyone buying the dip right here, I have no problem with that. I think it's an easy buy the dip. I mean, like you would have to assume they're sandbagging for Q4, and you would also have to assume the street's just feeling a little bit of buyer fatigue, which is fair, but that is not a reason Nvidia should be down after those earnings. Like unequivocally across the board from some of the most respected investors, Brad Gerstner, all these funds came out and they said this was an amazing quarter. And it was really hard to find the red flag outside of maybe gross margins, but that is a temporary thing that we think, or that the street believes is probably going to get better over time as well. Okay, let's listen to Pomp on his thoughts on Bitcoin, what he here at this $97,000 range, and if he thinks we're headed into the 100s.
Talk about what's next for Bitcoin, other crypto. Anthony Pompliano, founder and CEO of Professional Capital Management. You're a viewer. You saw both Michael Saylor and the other individual. I have to look up his name to find it again, but I thought it was really interesting that the usage case for Bitcoin in a portfolio, it can augment certain conservative strategies. And I'm wondering, are we going to see more of that? And is it for fiduciaries and for pension managers and people that he was talking about narrowing the liability gap for state and municipal employees in their pension plans using Bitcoin to augment the return. Is that prudent in your view?
Well, I think there's a couple of things going on. First of all, when you talk about corporations, historically, they've had two levers to pull in terms of improving their business. They can drive more revenue or they can cut expenses. What Michael Saylor really introduced is this idea of taking your balance sheet and creating a third lever that you can pull. It's not really that new. Real estate has been doing this for a long time where they use that to secure loans and do other things. It's just that we haven't thought of software companies or others being able to do the same thing. And so now you have an asset that obviously is growing very quickly. There's only 21 million of them, and it seems to be working out. Now, what I do think is interesting is because there's only 21 million of these, anyone who buys it, if there's increased demand, the price goes up. And so, we had a fund that was anchored by two public pension funds that we raised in 2018. We bought Bitcoin around $5,500 for those public pension funds. They're up really big on it. And so I do think that anytime you buy an asset, whether it's Bitcoin stocks, commodities, real estate, et cetera, and it goes up a lot, it will help close those funding gaps. Now, what I do think is really important, though, is Bitcoin in particular was a bottoms-up adoption story. So historically, technologies are top-down. Governments and militaries adopt it first, then corporations, and eventually individuals. Here, you actually had individuals first. The reason why that's important is Bitcoin is the only asset that I know of in financial markets. As the price goes up, it becomes less risky. And so now you have the biggest pools of capital showing up and saying, it now is only big enough where I can start to buy it. And so you have central banks, you have public pension funds, et cetera, that are saying, okay, now we're getting close to $2 trillion. I can start allocating to this thing. And so individuals front ran it, but the largest pools of capital still are heavily under allocated to this asset. I think it's going to be very good for price.
So to augment a fixed income investment for an insurance company or pension, there's some underlying Bitcoin that has to rise. I think he said over a 4-year period, it has to rise 6% per year. You remember that? That's what he said and you'd break even on that. Anything above that, you're augmenting the return because rates have been obviously so low for a lot of these fiduciaries that are trying to guarantee, retirees or whatever, a certain income. So you would take that bet. You don't think it's going to be 50,000 in 4 years.
Well, what I think is really important is if you go and you look at the data of putting just a little bit of Bitcoin, you don't have to put a lot of Bitcoin. We can put 1% of Bitcoin into a portfolio. It not only has the price appreciation, but it also drastically improves Sharpe ratios and many other aspects that these fiduciaries look at. Now, I do think that the underfunding or that funding gap for public pension funds and many other these large pools of capital is drastically under-discussed. What are they going to do? Right? They don't have many options. And so it doesn't mean that you should go and throw a Hail Mary and put 50% of your fund into, some risky asset. But it does mean that if you can take a risk reward asset, which according to Fidelity has been the best risk reward asset over the last 10 years, and you can put that in your portfolio. We're talking about right now you have it at zero, just get off zero and put some.
Tom Lee's on CNBC. Let me pull that up right now. Let's see what Tom Lee has to say. Let's rewind from the beginning. Let's get him right here. All right, here we go. Here's Tom Lee on CNBC.
We were talking about earlier.
3% which initiation starters, right. Or the only other one I thought.
Fueled until the end of the year. He thinks S&P can reach 6,100 by then. Tom Lee joins us this morning, Fundstrat Global Advisors, Head of Research and a CNBC contributor. Tom, great to have you.
Good morning.
Happy Thanksgiving in advance. You do write about some clearing events that we've gotten through, right?
Yes.
Is clearly best into Treasury, and then NVIDIA's earnings too kind of remove some uncertainty?
Yes, and we could tell the market was sort of holding their breath on both, because once NVIDIA reported, the markets began to levitate. And of course, we're seeing the market reaction today to Treasury Secretary. These are all both good events, but also showing you there's been a lot of cash on the sidelines, which is why we're rallying.
Right.
Yeah.
Although making a pretty good yield, I imagine. What's the impetus to leave those sidelines if rates can hold these levels overall?
Well, I think one thing we have to keep in mind is there's $7 trillion of cash on the sidelines, which I think in general portfolios are overweighted and risk-free. And I don't know if it's going to be 5% 2 years from now. So I think investors, as they're planning ahead and they're seeing an economy that's resilient, I think the case for equities is still very strong right now.
What is have you done any work on earnings for next year or the year after?
We're actually working on it now. Our outlook comes out December 12th.
All right. So we'll check back with you then.
Yeah.
Meanwhile, what What sectors do you favor at this point?
Well, I think the template that we think makes sense is buy things that either benefit from a dovish Fed or a Trump White House, which is small caps, cyclicals like the financials, the regional banks and industrials, and of course, crypto, especially Bitcoin and some of the proxies like MicroStrategy and Semler Scientific.
But did you hear what we were just talking about? Can the Trump administration get away with the pro-growth policies and a dovish Fed at the same time? Because some of them work against the Fed being able to cut rates.
Yeah, I mean, I'd say the market is very skeptical at the moment. That's what we're hearing from our clients. But that also means that's room for positive surprise. And I think one thing to be mindful of is the Fed can be dovish even if there's resilient growth, as long as inflationary pressures and expectations remain intact. And so far, that's been the case.
Has it, though? We're seeing a little bit firmer core readings on inflation, and I guess it depends on what he does with tariffs.
Yeah, but if you look at survey expectations, whether the Federal Reserve Survey or UMich, we're seeing 5, even 6-year lows on inflation expectations. So we're back to pre-pandemic levels from what consumers see. And then if oil falls, as you know, that sort of pushes down the inflation forward curve.
Bitcoin's falling, folks. We got Bitcoin at 94,000. Nvidia's down 4%. Bitcoin taking it on the chin right here, down 94,710 currently right now on Bitcoin.
On the 1-year expectations, right?
Yeah.
Fives have not been as well behaved.
That's right. And, those surveys are notoriously a little funky because if you look at the range of answers and the actual data, some people put 1,000% as the survey answer. So they can tend to skew the actual medians.
Right. Meantime, there is this school of thought that commodities are not suggesting rampant inflation or a return to a double top CPI. You got Europe increasingly exporting disinflationary narratives, certainly China.
Yes, right? That's right. And I think there are many people who thought inflation would pick up because of tariffs. But as you know, it's not clear really what ends up being implemented. And if we get milder tariffs, that's actually less inflationary pressures.
Page 1 of the Times over the weekend was about companies elbowing each other to get in front of the president-elect to make their case to be carved out of tariffs.
Yes.
And then this morning, Reuters has a piece on the farm industry, again, looking to be exempted from deportationary efforts. How much policy risk do you think is going to be embedded in the next year at least?
Well, I think this is what investors are concerned about because we know that there was a campaign that was run on tariffs and deportations, but as you know, those can be very harmful to the economy. So I think that having the right cabinet picks can actually get us into sort of the right blend of sort of outcomes. And I think that's what the market's starting to price in.
Meaning you've been impressed with the picks so far?
Yes, I think not only have I been impressed, but we can tell from our client feedback that the market's really like this.
We're up over 25% in the S&P this year. We only have a few weeks left in the year. What were we up last year?
Over 20.
I mean, what does history say about the ability to put another year of significant gains after two like that?
It has happened because, we're talking the late 90s, then 97, then we're 98, 99. But realistically, for the audience here, 20% is not a realistic expectation for the S&P. I mean, S&P return should just mirror earnings growth, which is probably double digit. And then they should look for opportunities where there's undervalued sectors, like whether it's the financials or small caps, where they can get more than double digit gains. But I agree, 20% a year is, very
these
difficult.
have been two very heady years.
So Tom's saying, look, it's hard to do a three-peat. It's hard to be the Bulls in, when did they do it? 92 to 95? No, 96 to 98. It's hard to do 96 to 98, but maybe this market can.
Yeah,
correct.
Without a doubt.
Although I think we've had 8 instances of back-to-back 20% years since the 50s.
Yes.
Right? It's not that uncommon.
Yes, and I think one thing that we have to kind of appreciate is that when someone says the median return for the S&P is like 9%, there's actually very few plots that are 9. It's either up 15 to 20 or down 10. So I'll take the 15 over the down 10.
Let's do that.
Yeah.
Let's talk soon. Thank you.
Yep,
Good to see you, Tom Lee.
So that's what we got from Tom Lee. Yeah, there's a good question right here in the chat. I just checked. Someone said, Amit, why are MicroStrategy puts red? It's a hell of a question. Puts should be green because the stock is down, but puts are red. Yeah, this is weird. Usually, have you guys seen this before? Is this the first time I'm seeing it? Puts should be green when the stock goes down. That's the point of buying a put? Why are all the puts are red today? Like, you should be getting more to sell a put today than less. I don't know, unless the put pricing was kind of differently linked when MicroStrategy went to 500. It's due to IV crush. But no, but I'm going to December 27th. Does that not matter? Like, I'm not even looking at next week. I'm looking at a month from now. These puts are down 7 to 8%. Volatility, IV crush. Yeah, I mean, look, one argument is the put premiums were just way too high. And now the IV is getting crushed because I mean, we went from 540 right now to almost 385. Right now we're at 406 on MSTR. But when you go from that dramatic of a decline, yeah, it's a hell of an argument that at that point the put premiums can't keep up and continue going higher if the IV does indeed get crushed. The IV was crazy for the next 2 years, bro. Yeah. VIX is down 3.6% right now. Still IV crush. It's up 400%. Yeah, I mean, look, I'm complaining about the put premiums being lower, but even with put premiums down 10% today, I mean, you can make a lot of money if you are correct on the direction of MicroStrategy by selling puts. The return is like unbelievable. But again, there's a reason the return is unbelievable, and that's because of the volatility of this asset. Yeah, this is an interesting one. I guess puts are down due to the volatility in the IV crush right here. 4% down on MicroStrategy is not giving the puts any more premium given how high they already were. MicroStrategy was just at 383, by the way, 2 seconds ago. Like literally 2 seconds ago. Like at 10:10. It's now 10:18. Now you're at 405. All right, so Bitcoin's going down right here, 95,000. We hit a low of 94.5. Again, the whole Michael Saylor MicroStrategy thesis kind of goes to zero if Bitcoin continues to fall. So you kind of can't have that happen right now. But Bitcoin showing a little bit of weakness right here, down from 99 back to 95. NVIDIA also showing weakness, down 3.2%. Really curious why the street's selling this off. Just not sure. Kind of feels like they know something that people don't know. And that's because retail's not selling NVIDIA right now. I really doubt that. Seems a little bit more institutional. But no reason why. Palantir right here at 66.55. Meta 566. Rocket Lab 23. Hood is still holding above 38, which I'm happy about. Holding above 38 is really bullish for Hood. Again, you can see Bitcoin's down a lot. Hood is not down because Bitcoin is a catalyst for them. It is not the only part of the business. That is why I love Robinhood. I just think there's so many elements of the thesis that aren't contingent just on Bitcoin. Now, they are contingent on the market. If the market were to tank, then Robinhood would tank. But Bitcoin going up or down is not literally up or down for Robinhood. HIMS right here, 29.32. HIMS is basically going to make the levels they were at last week when Amazon stepped in, up 15% on the day. It's up almost 80% from the lows at 17. So you got HIMS getting some momentum right here. MicroStrategy 409 down about 3%. And then Marathon is slightly green, 26.24, up about 0.85% on the day. Amazon making their own chips per Bloomberg, maybe why NVIDIA's red. Is that headline new today? Because we've known about this for like a couple months. Oh yeah, that headline's new. Yeah, there you go. That explains it. 17 hours ago, this is a big article Bloomberg just came out with. Yeah, that's why they're selling it off. Amazon's moonshot plan to rival NVIDIA in AI chips. The cloud computing giant won't dislodge the incumbent anytime soon, but is hoping to reduce its reliance on the chip maker. Well, there you go. That'll do it. That'll do it. Is Amazon up on that? Amazon is up 1%. Now, granted, does the market think NVIDIA's future growth is really going to be tampered by Amazon? The same way they thought HIMS was going to be tampered by Amazon? Because if that's the case and NVIDIA does what HIMS does, NVIDIA's going to be back. But I guess that could be an argument. RGTI is up 90% today. Yes, they're up 90%. I still don't know exactly why. They did a at-the-money offering, but I guess they're raising money to expand their quantum computing applications, and so that's why they're currently up 90% right now. Where's Oklo? Oklo's down 9%. ASTS is up about 0.12. And Palantir just chilling at the $67 level. Rivian's also up 11% today. Yeah, you're seeing a lot of move. Wow, 11%. That's not bad for Rivian. Seeing movers in a lot of different directions. Is Tesla still down? Tesla 351. Tesla is still slightly down. Okay, so there's another reason the markets may be going up right now that I think we need to talk about, which is Trump's secretary pick for the Department of Treasury, the Treasury Secretary. So this right here, I think is important. Then we'll take a little bit of a listen to this. But Scott Bessent is Trump's Treasury Secretary pick. He's introduced his 333 policy, inspired by Japan's 2010 economic revival strategy. The plan focuses on cutting the budget deficit to 3% of GDP by 2028, achieving 3% GDP growth through deregulation, and increasing energy production by 3 million barrels or its equivalent per day. 3333 is what you're seeing from Scott Bessent, and that's why the market's a little excited about that. Let's get some analysis right here on if this Treasury Secretary is bullish and what the market thinks it means going into 2025.
Now is Evercore ISI's public policy chief strategist, Sarah Bianchi. And Sarah, this is a pick that took longer than many of the other top cabinet positions. It seemed that there was infighting that kind of broke out into the public eye. How do you think Wall Street's feeling about this? This is something that kind of calmed some nerves?
I think that's right. You're right to say there was a lot of swirl around this and potentially some infighting. And then I also think there was this tension, and there always is this tension in Trump world between tariffs and some of the immigration agenda that people express economic concerns about, and a market-friendly Treasury Secretary of the likes that we've seen for the last a few rounds from different administrations. So I think the market's really relieved to see this pick. We'll
you see it in lower Treasury rates.
Absolutely,
today. We're watching it across the board. The 10-year at 436 after elevating close to 450 last week. The idea from the markets is not that tariffs are not going to be an issue, but maybe they're manageable. Maybe it's more of a negotiation tool. Maybe there is a deal that can be done with some of our partners internationally.
I think that's right. That's certainly his approach. But I'm waiting to see how the overall economic team shakes out. Because if you remember last time, we had Secretary Mnuchin in Trump 1.0, and I think some similar kind of ideas and from him. But we also saw Lighthizer at USTR, and we saw China tariffs on average go up from 3% to 10%. So I think we're going to have to watch that mix. We understand that President Trump likes to have all those different viewpoints arguing in front. So I think the markets should be optimistic about this pick, but they also should wait and see how the dynamics really play out.
So what would be dynamics that would be concerning for Wall Street?
Well, I'm still very much watching to see if Robert Lighthizer lands in this administration in any capacity, whether it's White House counsel. I understand he doesn't want to go back to USTR, but trade is super technical, and he knows his way around not only every statute that ever was in trade, but also around Trump world. And
but that concerns you if Lighthizer is in this administration?
Well, I think it will point to a more aggressive, coherent and very active tariff platform, and ones that the Treasury Secretary is going to have to make his case against. So I think
So the tariffs associated with these Trump policies and these cabinet members' perspectives on tariffs, like Scott Bessent or some of the other people, Howard Lutnick, who's a big fan of tariffs, who's the Commerce Secretary. I think all of these are still unknowns, and the market doesn't like unknowns, but the market is willing to give Trump the benefit of the doubt on these unknowns because they believe deregulation will have enough pro-growth built into it where essentially we can grow out of the tariffs, even if the tariffs create some negative impacts. And so I think right now, going into January, before he gets sworn in, the market fully doesn't understand his economic agenda, but they do understand it is going to be premised. I didn't mean to bang the table right there, you guys heard, but it's going to be premised on more growth. And that's why the markets are willing to say, hey, we still have a reason to buy equities right now. I mean, it's pretty credible. Also, like, this is one of those things where the amount of optimism we're seeing in the United States in terms of growth, where else would you put your money, right? You have money market funds that you can put your money into, but those returns are going down. The 10-year is going down right now, so people are buying up those bonds because maybe they're not as concerned. Yeah, look at the 10-year, 4.2, baby. 10-year's at 4.2. This thing was almost at 4.7 the other day. Markets are definitely feeling inflation might not be that big of a concern, which is really nice to see. The Fed really wants to see these 10 years come down. Hopefully that'll help mortgage rates come down. And so you've got all these different verticals that are expanding into 2025. You got earnings growth that is still good. Maybe you don't get 20% out of the S&P, but if you get 10% and you get 15% from small caps, there's still a lot of room to grow if your money's not allocated just on the sidelines. And so I think you have a lot of people coming in right now saying, all right, we're in. It's time to get into the market. Yeah, I didn't mean to bang the table when I when I said that, but I guess I ended up having to. You guys, someone said Hulk smash. Do you guys remember the Hulk glove? Do you guys remember that thing, that Hulk toy glove? I remember I bought one of those things, or I think I got one of those things for Christmas. Look at this thing. It's $33 on Amazon. Look, I was this kid, bro. I was this kid wearing these things in like 2007. I guess it was previewing my future of banging on the table when I get excited, aka pulling a carp. Pretty incredible. When is the India DD coming out? So I've been privately doing India DD. The problem is we can't invest in any of the good parts of India outside of the large cap ETF, because like the individual stocks and the individual small cap ETFs are not as easily available. So the reason I haven't shared it too much is because there's nothing to buy with the DD. Now, India right here is down 5% of last week because Adani, who's like the big India billionaire entrepreneur, had a real big fraud controversy. I mean, imagine like someone accusing Jeff Bezos or Elon Musk or Jensen of fraud. So that's why India was down over the past couple of weeks. And it might continue to go down, but the large caps are just not that exciting to buy. The small caps are, but I got to figure out how we can get allocation to that. When can we buy Swiggy? Yeah, we're not going to be able to buy Swiggy. My uncle just got his shares for Swiggy. They're going to list pretty soon. He just got them in his account, and it's pretty cool. So that one hopefully can be a really big one over the next decade for India. You should wear them again, Amit. Yeah, I got to buy them again and wear them again one day. Rocket Lab got a grant to manufacture semiconductors. So I think I heard someone say this morning. It's like $23 million, right? That was the contract they got awarded today. That is also another reason why they're continuing to do well. I mean, Rocket Lab was at $26 in the pre-markets, dude. They did get upgraded to $30 last week. Yeah, Rocket Lab looks like a $23 million contract. That's what it looks like. And that's good. More money. $23.9 million award from the Commerce government to increase semiconductor production at the New Mexico facility. There you go. There you go. That's what you got on Rocket Lab. Not bad. Not bad. Uncle in the chat says it was up last 2 days after elections. Yeah, starting to have a little bit more recovery there. But that Adani news ended up being pretty bad for them. At least it's not Ambani. Ambani's like, in my opinion, even bigger than Adani in India. And he's had controversies before, but it's not as bad of a controversy as, and to be honest, I don't even know much about the Adani thing. I didn't even read that much into it, but it looks bad. It looks like it's not good. And, India reflected that this week. But now we got to kind of see how the market thinks of it. Wow, MicroStrategy going back to 420. Holy crap, dude. Goodness gracious. This is incredible. Look at MSTR, bro. Right? This is insane, dude. That's because Bitcoin went up back to 96 from 94. I mean, goodness, dude. The roller coaster of being on this stock right back into that 420 range. Incredible. Ricardo bought at 390. All right, well, you're up. You are up. Gene says the odds of Bitcoin touching 100,000 before December collapsed from 88% to 36% on call sheet. Really? Wow. That was that's an interesting. Is that just because of the price itself? Let's see. Yeah, look at that. Yeah, you're right. Look at that. This is call sheet. They're showing a collapse. Maybe as the price goes down, more people bet against it. But it did indeed go down. Yeah. It was at 80%. Now it's at 44%. But people do think before January, there's a chance that it can get there. 44% before December, 75% before January. Any news on Rivian? I don't see any news on Rivian. They did get some cash infusion last week. So that's good by Rivian. But about 5.8 billion. But outside of that, I don't think there's anything too crazy from that. Before December is 5 days from now. Yeah, that's fair. That is fair. I mean, December, I forgot. It is November 25th. So that is probably theta decay. You're right about that. So now the question is going to be before January, if we can get to that 100,000 level. Thoughts on XRP ETF listing in Europe? I didn't even know that. Where's XRP? Is XRP up on that? I didn't know there was an ETF listing in Europe for XRP. Coin market cap, we have XRP up 23% the past 7 days, down 2% today. All cryptos kind of down today. But Solana's at 242. They hit 267. XRP is at $1.42. Ethereum's at 3,400. Ethereum was at 3,100 on Thursday. They've had a nice run, 11% past 7 days. And then Bitcoin right here at 96,000. Again, Robinhood did list WIF today. Dog WIF hat. As you can see right here, $3.30, up 6% over the past year. WIF is up over 500%. Market cap of 3.3 billion. There's 998 million WIF in circulation. I don't have a position in this, but I know a decent amount of people that bought this thing very low, and they made a lot of money off it. There's a big Twitter community for WIF. It's a pretty big deal in Twitter in the crypto space. So the point is Robinhood's listed it, and that means they can get more revenues from trading volumes and get more crypto activity on the platform, which is pretty good for Robinhood. And today on CNBC, dog WIF hat. That's kind of crazy though, right? Like people have been waiting for them to list it for so long. So the WIF community is so happy because they're like, finally, we got it on Robinhood. And Coinbase listed them last week. And it's because Gensler's gone. And so now, just like the amount of just intimidation and harassment has been lifted off the shoulders of innovative tech companies like Robinhood and Coinbase that want to start putting out more products and more coins. They just needed the regulatory clearance to do so. And with Gensler gone, it seems like they now have the ability to do that. 1030 slam is here, folks. Oklow's down 10%. Tesla's down 1%. Palantir down from 67 to 65. Where's Hood? Are we below 38? We are 38.41, still holding 38. That is not bad at all. Archer's still up 26%. Archer's not slowing down. Meta's up a little bit. Macy's is down 3%. CleanSpark's up 1.3%. And MicroStrategy very close, getting back to that 420. So really at 1030, we have NVIDIA down 4% and Tesla down 1%. And that's what's getting the gist of this slam. S&P 500, just below 6,000. And then IWM. Wow, all-time high on IWM, 244, small caps. Look at that, all-time high on IWM, 244, up 2.25%. Small caps are getting some momentum. Someone says, Amit, it's good Gensler's gone, but in my opinion, Coinbase shouldn't be listing meme coins. There's plenty of valuable coins they can focus on. I disagree with that. I think Coinbase and Robinhood should list every single coin that exists. At the end of the day, this is about giving people the opportunity to trade. I don't care if anyone buys dog WIF hat more than I care if anyone buys SMCI or NVIDIA. Like, I don't care. It's a free market. People should buy and trade whatever the hell they want to buy and trade. And so Robinhood and Coinbase just need to be the distributors. I mean, because to me, Robinhood discriminating against certain coins is like them discriminating against certain stocks. And you would never do that, right? Outside of like OTC penny stocks, but those widely aren't assumed to be part of the broader stock market. So if Robinhood's like, hey, we don't like SMCI because we think they're super risky, it's like, no, they can't just not offer SMCI. A meme coin, Pepe might be super risky, but Pepe's also outperformed pretty much every stock in the stock market this year. So like for the people that want to take that risk, they should be willing to do that. And Robinhood should be able to collect that revenue. Same thing with Coinbase. Let the degens be degens. Exactly. Let the degens be degens. I mean, look, this is really libertarian for me. I don't love the meme coins. I'm not in the meme coins. I don't really care about them. But the point is, if people want to trade them, they should trade them. Because then you get into a really bad bright line of, all right, so is Archer Aviation a meme stock right now? Is Oklo a meme stock? There's no revenue. Why is Robinhood allowing people to buy it? Right? But that sounds like a pretty authoritarian argument. And so they just need a regulatory clearance. Now that they have it, I think they're going to allow a lot more coins. See that there. LOL, you just want Hood to pump? Well, also, I'm a Hood shareholder. And yeah, I would like them to have more streams of revenue. No, but seriously, like outside of me having Hood, I genuinely think they should not be limiting themselves to different coins. Because if you buy a coin and it goes to zero, that's your fault. If you buy a coin and it goes to a $5 billion market cap and you bought it at a $10 million market cap, that's also your fault. And you get to enjoy it in the upside or the downside. Same thing with stocks. There's nothing that different. There's really nothing that different. And so ultimately, I think that's kind of how their philosophy should be on it. Amit, do you have SoFi? Yes, I do have SoFi. Have some options in SoFi. I still have my sister's options on SoFi too. Those are 7-12 spreads. And it looks like she's going to make a full profit on those. She's up 400% on those. We have another 90% to go to get to that 500%. They expire in January as well. Strike price is 12. SoFi's at 16. So going to be selling those in January for her as well. But yeah, SoFi continues to gain some momentum. SoFi right here at 15.74. Still below 16, but in the high 15s. How many people agree with that? How many people agree or disagree? Should Robinhood be listing meme coins or Coinbase? Agree or disagree? Let's do a poll. Let's do a poll. You guys know my opinion on it now. Very libertarian about this. But let's see what people think. Should Coin and Hood list meme coins? Like, to me, it's a very simple argument, bro. It's like, let people trade whatever the hell they want to trade. That's it. It's not that complicated. And if you lose money in the stock market, just like you lose money in the crypto market, like, everyone has to be a big boy and realize, all right, we lost some money. Like, we got into the wrong trade. Next time we're not going to do that, right? Like, this is just being an adult, in my opinion. Free markets are important. Yes, but there should be education of younger retail investors so they aren't separated from their money. Yeah, that's fair. But again, whenever someone says, it's always bright lines, right? What is bright? Do you have to take a test to learn how to invest? Do you have to deposit $10,000 to show that you're a sophisticated investor? Like, what are the bright lines to a lot of these questions? I agree. There should be some bright lines, but the libertarian part of me is like, all right, so how do we determine those? Because it's not easy to kind of come up with that exact answer. 73% of you say yes, 27% say no. I think that's fair. They should be able to do if they want. However, I think if Robinhood wants to be taken seriously like other brokerages, they won't do it for their brand. Yeah, but I think that argument I've never agreed with Bobby, because Robinhood is done with that argument of like, we need to be taken seriously because we're not an adult platform like Schwab. I think Robinhood is running away with being the most innovative platform in the world, and that means you're going to have betting markets. You're going to have meme coins. Like, you're going to have things that cater to different audiences. Now, there will be some people that just never go to Robinhood because they don't give a shit about it, and they think Schwab and Fidelity is more safe, all that stuff. But to appeal to the generation, my generation, that's about to inherit $80 trillion of wealth over the next 30 years, you're going to need things that people care about, like dog with hat. It's people care more about that than Chevron, right? And if you want to appeal to that generation and grow, because Schwab and Fidelity, they're not growing anymore, right? They're growing like maybe 2% a year. To grow at 30, 40%, you need those new innovations. And so I think that's ultimately what we're going to try to see from Robinhood coming up. But yeah, some people will just never take them seriously, and that's just something they have to deal with. All right, let's get another update from CNBC. Let's see what we got going on with the suits, and then we'll keep going from there.
This hour. Speaking of retail, Macy's under pressure after the company reported preliminary results that missed expectations and also disclosed an investigation into an employee who Macy's says intentionally made erroneous accounting entries to hide more than $130 million worth of delivery expenses over several years. Stock down 4%. Also keeping our eye on Bitcoin, of course, after hitting a new all-time high of a little more than $99,849 a coin late Friday. The crypto now up 40% this month alone, backing off today a little bit, but still at 95K. Guys, as far as what we're watching this week, we do have some notable earnings, especially going to be watching the consumer earnings as we get into this holiday season, like a Dick's or Nordstrom, Kohl's or Macy's. As we wrap up the earnings season, we get to some of the big retailers. And then economic data. I think the highlight will be the PCE, because remember, Thursday is Thanksgiving holiday. So we'll get the Fed's preferred measure of inflation on Wednesday. And this is the market obsession. Why? Because the Fed has been obsessed with it and trying to tame inflation. There is some expectation that we'll see a stronger month-over-month number in terms of core PCE, core inflation, stripping out food and energy, up 0.3%. That's the expectation. And again, it would be a little bit firmer than where we've been in the last 6 months. So questions over how the Fed's going to deal with it. Kind of inconsistent Fed speak on whether they'd be open to a pause as soon as December. Most economists are now forecasting that they'll pause in January and cut in December. Guys, what I'm paying attention to today, though, are the forecasts for 2025. They're starting to come out, and they're looking very strong as far as the economy. Here's, for instance, Bank of America economic outlook for the year ahead. A brave new world, they call it. We expect another year of unbalanced growth characterized by—
Wow. So Bank of America, they're bullish going into 2025. They think growth continues to occur.
A U.S. outperformance and policy uncertainty, which will impact the euro area and China the most. All in, stable 2025, 2026 global growth in the 3.2 to 3.3 range. After better than expected 24, we upgraded our forecast for the U.S., but downgrade them for the euro area. Meanwhile, we expect China to grow below targets. And that's kind of the vibe for, David, what we're seeing in terms of the outlook, which is continued U.S. outperformance, which we see in the capital flows, which we see in the U.S. dollar strengthening, and which we see in the economic data.
Yeah, the land of the blind, the one-eyed man is king.
I guess so. Deutsche Bank also came out today and said base case, stronger U.S. growth and inflation. Higher, this is also, it comes with some caveats, which could get in the way of all this optimism. Higher Federal Reserve terminal rate than previously expected, with the opposite conditions for Europe. Because if we get better growth and we get maybe firmer inflation, then that means the Fed can't cut as much. So that's a risk. The other risks that I'm reading about, which are still very much wild cards in the Trump administration, tariffs, of course, which could hurt growth and also
create inflation.
And then the immigration policy, which could ultimately be negative for the labor market. The market.
And also create inflation.
And also create inflation.
Yeah.
Market is telling you net, the policies look positive and that there's this brighter U.S. economic outlook. But I think the question is what he does and what this administration does on that front. It's why you're seeing some optimism today on the Scott Bessent pick for Treasury, because this is a guy who's hedge fund manager known for, betting against the British pound and the Japanese yen. He knows the markets.
Right. He's a macroeconomics focused fella.
Which is encouraging.
Yeah, I mean, that's 30 plus years ago.
So you have many banks kind of coming out with their broader arguments for how the market should be doing. And a lot of these guys are, again, 65 to 6,700. MicroStrategy is now green on the day. Robinhood 38.48, Bitcoin 96,000, Marathon up 5.4%. That one's doing well. SoFi 15.75, IWM at 244. If the market broadly believes, or these funds, Bank of America, Deutsche Bank, et cetera, believe that there are risks to inflation, but growth can outpace inflation, and as a result, the market can have stronger earnings momentum, then it makes sense why they're advising their clients to buy, right? And it's kind of scary because when all of them come together and they say, hey, we think the market's going higher, that tends to be a signal that there's too much groupthink in one direction. And I'm sympathetic to that argument. I'm just trying to figure out, all right, well, what's the bear case for 2025? Like the real bear case, what is an argument? Like going into 2024, a lot of the bear case was inflation, right? Because inflation was still 5.7%. The Fed said they were going to cut 3 times. And, by March, people thought they would cut 6 times. We didn't get a single cut until till September. Like it took 9 months to get a cut, right? And so there was a lot of bearishness going into 2024 because people didn't think inflation was going away. And that was a simple bear case that you could justify for the S&P to be down. But Tom Lee thought inflation was going down. Dan Ives thought tech would still show amazing earnings growth. They turned out to be right. In 2025, it's kind of the same thesis. Tom Lee thinks inflation's coming down. And Dan Ives thinks that tech is going to continue to compound in different sectors like software, which is good for a name like Palantir. So it's one of those things where we're trying to figure out what could happen into 2025. Meet Kevin is the bear. Well, Meet Kevin bought Tesla, right? He's back in. He bought Tesla. He bought SMCI. He bought Enphase. So he's back in the markets. He's not completely cash anymore. Tesla about to go green at 352. Dude, the fact that even Meet Kevin capitulated. I mean, come on, guys. This was like one of the biggest bears publicly on YouTube over the past couple of months. For him to buy Tesla at 340 after selling at whatever he sold at 250, 190. I don't know where he sold at, but he was bearish for the past couple of months, right? He was bearish after earnings, bearish after the robotaxi day. For him to buy back means that he thinks Tesla's a runaway train and it's not stopping. And here's the thing now. Here's the thing about Meet Kevin. If he sells Tesla, he's going to get even more hate. But I think at this point, he doesn't care because now you got the Tesla bulls happy again that you're back in. And if he sells it again here, he probably will. I don't think he cares. But you will get a lot of people that just can't trust him anymore and believe his insights on Tesla. But you do have Tesla at 350. He is preaching a recession is coming. Is that what he's talking about on his channel? Because it's kind of weird then to buy some of these names if you think a recession's coming. I mean, I don't think Enphase does well in a recession, right? Enphase right here, 71, up 7%, unless he's just swing trading them. That's different. If he's just swing trading these and he's going to be out before the inevitable recession, then I guess that's different. But I don't know. The point I'm trying to make is that a lot of the even bearish people that have been so publicly bearish, they're getting into this market. And even if it's just for a swing trade, they're getting in because they cannot see these stocks run without them being part of it. And that's Meet Kevin, who manages 40 million in his ETF. Imagine the fund manager that manages 2 billion that has barely participated. Think of the FOMO they're feeling right now. I mean, it's one of those things where it makes people get excited to come back into the markets. TD Cohen adjusts price target on MicroStrategy to 525 from 392. Wow, TD Cohen. These are big names getting into the MSTR story. I'm going to read that report. We read one of the MicroStrategy sell-side research reports today on the upgrade. Yeah, look at this. TD Cowen. Wow. This is like not a small firm upgrading MSTR. Holy crap. The toots are getting on board, folks. They are getting on board. MicroStrategy represents the world, a new kind of firm, the world's first publicly traded Bitcoin treasury company that converts market appetite for volatility and return on an effectively leveraged basis into Bitcoin. I cannot believe I am reading TD Cowen say that, hey, we're bullish MSTR. This is the thesis. And they're just echoing what Saylor has been saying. What started as a defensive strategy to protect the value of its reserve assets has become an opportunistic strategy intended to accelerate the creation of shareholder value. MicroStrategy intends to continue acquiring and holding Bitcoin via proceeds of debt and equity offerings. Forthcoming catalysts, adoption of Bitcoin, clarity around Bitcoin federal tax policy, significant progress in cloud-based adoption by software clients, continued assimilation of Bitcoin into political and economic mainstream, adoption of Bitcoin KYC and AML regulations, upside scenario, Bitcoin to 150,000 by November next year. Base case assumptions, Bitcoin to 102,000 by November next year. And the downside scenario is Bitcoin to 20,000 in November 2025, which would be down 75%. So now the shorts have to ask themselves a question. If TD Cowen and these other Wall Street firms are getting a lot more excited about MSTR, it's not just Saylor being crazy about leveraging the company for Bitcoin, but it's the banks agreeing and the Wall Street firms co-signing his strategy by giving him a nice price target. Do you continue to short? Shorts are right now 28 million of MicroStrategy's float, I believe about 15%. Do you continue to short? And then same thing with Marathon. Marathon right here, 22% of the float is short. Marathon also deploying the same strategy. Do the shorts continue to pile in to Marathon? Palantir right here, 65.55. MSTR is at 427, now green. Marathon right here at 27.94, almost touching $28, up 7%. Did you see he started a robotics VC venture fund? I did not see that Kevin started that. Okay, so I guess he's like raising money for private deals in the VC space for robotics. Look, I think it makes sense. The problem is, VC is a hard game, dude. A lot of companies in VC go to zero, and there's a lot of robotics companies out there that are competing for it. So as long as you have some good quality robotics companies, then maybe you can do well. But in general, venture capital is just harder. Look at MBLY. This is Mobileye, right? MBLY. Yeah, they're up 5% as well. Intel owned a part of these guys, right? Intel sold off their stake. Or does Intel still own their stake in Mobileye? But these guys are up almost 6% currently on the day. Marathon 28. There you go. Marathon 28. Not bad, man. Kris came on the show last week. It was 19, gave us the thesis. If you followed it, it's done well so far. There's obviously risks to the thesis. The risk is that Bitcoin collapses. But it looks like Marathon, and look at CleanSpark right here. CleanSpark's up 3%, Marathon's up 8%. Riot is up 3%, Marathon's up 8%. The outperformance of Marathon against the other miners is based on this Bitcoin treasury argument that the street thinks is real. There you go. There he is in the chat. Kris Patel, 28 on Mara. There you go. Not bad. Not bad at all. Toby says, was easing into some options on MicroStrategy during the dip. It bounced back too quick, and now I'm up 50%. Oh my gosh. Up 50% in 20 minutes in MicroStrategy. It's pretty amazing. Pretty amazing. And again, this is the stuff that happens sometimes when you have these types of asset classes that are as volatile as they are. I think Steve called me. Let me see if I can get him on the phone. I have a missed call by him. Let's see if he picks up. Let's see. I'm sure he's super happy about Palantir right now. Yeah, Marathon right there, 28.14. Not bad. Sofi 15.80. Where's Tesla? Palantir 65.75. Tesla is green now. Tesla's about to be green, 351. Oh, wait, Steve's not picking up. He did text me this morning, though. He said Palantir is... What did he text me? I didn't respond because I don't respond to Palantir bears, but he says Palantir is ridiculous. I couldn't respond to that. No, I'm just kidding. I just saw it before I started the show. But yeah, I mean, even he must be thinking this is crazy because he's the one who said Palantir is just going to keep going higher, even though he's mad about his covered calls. I think, look, if you're in covered calls on Palantir, look, here's what it is. I think if they're expiring soon, you might just have to pay the debit and get the hell out of them. Or you might have to roll it for a debit. It's one of those things, bro, where I don't know. I mean, either this is the biggest bubble and everyone's covered calls are going to be saved, or the momentum is real, and I'm leaning towards the momentum is pretty real. And might just have to chalk up some money rolling it because covered calls have not been good on Palantir for the past couple months. SoFi right here, 1580, S&P at 598, Enphase at 71. Up 7%. Amid, tell me why I should move all my money to Hood currently on E-Trade. Okay, so I think it's really simple, dude. I mean, like it would make more sense if Hood was giving the 1% match. They're not doing that right now. So actually, I mean, personally, I wouldn't until they offer a bonus match. I don't know if they're going to offer them in the future, but the general reason that I like using Hood is that the user interface. Like I tried selling a put on Schwab the other day. I couldn't figure it out, dude. Like I just couldn't. And maybe I'm just not the smartest guy in the world, but it was a hassle. It was a pain. It was like, what am I doing here? Like, what is going on? So the user interface I like, the overall innovation on products I like, and the ability to essentially be able to do whatever you want on the platform, whether it comes to crypto or options in a way that's simple enough to understand and to be able to get the gist of. That's why I like using Hood. And I think they're only adding more features. But personally, I wouldn't transfer until they bring back the 1% deposit match, because that's like the main catalyst to transfer. I don't know if they're going to bring it back, but if they get, or you could even hit them up. You could message their support and say, hey, can you guys give me like 0.5% of it? But you never know. They can maybe work out a deal because they're always looking for new assets. But that would be the main reason to transfer over, especially if they're giving you 1% and there's nothing different from Hood and E-Trade in terms of like real difference outside of Hood just being a better user interface, and you get 1%. That's when I think it becomes really easy to get a match. Schwab isn't made for normal people. Yeah, I found out, dude. Because I set up my 401k, and I'm gonna be putting in like 40 grand a year into that thing. And I'm like, you know what? Maybe I'm just gonna like buy my favorite stocks and leave them there and not look at it, because I can't think of logging into Schwab every day and trying to manage my options. Like it's just like it was just ridiculous, bro. It was ridiculous. And other people have said this. It's not just me. Other people have said, even Chris Camillo on the Dumb Money podcast the other day, he was trying to sell some of his Tesla. He ended up buying 4x more than he needed to sell just because Schwab is like weird to navigate, right? And so it does happen sometimes. And Robin is just a much better user interface. MicroStrategy 424, Enphase at 71, S&P at 598, Rivian 1165, Rocket Lab 24, back above 23, up 3.2%, Apple at 232, Meta 564, Macy's down 2%. SMCI, wow, 15%. 15% on the day. Love is up 7.78%. What is Love? Lovesac Co. This is another small cap. I have no idea. How did they get the ticker symbol Love? How long have they been around? When did they get this ticker symbol? 2018? They were able to IPO with the ticker symbol Love at 2018? What is Lovesac? What the heck is Love? A furniture company. Ah. I feel like that's furniture. Oh, these are the Lovesacks. Those are those big things. No, LUV is Southwest Airlines. LUV. See, LUV, when did they go public? They went public. How did LUV not get Love in 1980, but Lovesac got Love? I feel like they had to buy that. LUV is up about 1% right here. These are what the Lovesacks are. The big balls to sit on. Correct. That's not me saying it. That's Kris CRM in the chat saying it. That's me repeating Chris's comment. That's not me saying that. But these are big Lovesacks to sit on right here. These do look hella comfy though. Not gonna lie, bro. $1,000, bro. That is a little bit of money. $1,000 for this thing. It does look comfy though. Look at that dog just chilling on it. It does look comfy. $1,000 though. That's like, this is some rich people shit, bro. Like we could go to Alibaba and find this shit for like $200, bro. Come on. Come on, bro. Lovesac. Oh, Grindr, by the way, since you guys want to make fun of it. Grindr, baby, is at $15.10. Your boy got in at $14.07, and we're in this. We're in this. We're up a good 7-8% on Grindr. Now, I do have 5 covered calls at 15, but I have the rest of the shares ready to go, so we got to manage those. But Grindr also getting some love right here. Not doing too bad. Palantir 65.52, Tesla right here at 351, currently on the day. All right, what other headlines do we have? What other headlines are we looking at? What are we seeing right here? Maybe let's talk some Doge. Let's talk what Elon's trying to do. Let's see how Elon's trying to navigate. Oh, we got Mike Wilson. Let's listen to Mike Wilson first. We got Mike Wilson. This is the guy who was super bearish. Then he turned bullish. Now he has a $6,500 price target. He's on Bloomberg right now. What Mike Wilson has to say. All right, here we go. Here's Mike Wilson. Then we'll talk Doge.
For a while, I have to say, you sound pretty excited about next year in a way that I've not heard you for a long time.
Yeah, I mean, we're not always, one way. So I would say we've been excited about this for 6 months. It's just now we can kind of see it in a way where we can see a broadening out. We see it in the numbers, right? We've been waiting for this. So in the last 2 quarters, we've actually seen a broadening out of the earnings story for the first time, even before the election outcome. Okay, so this is a 2-step process. It's going to be, noisy. Stocks are expensive. Okay, that's something we have to understand. The markets are ahead of this already. Let's not think that we're discovering the light bulb here. Okay, the markets have already done this. So, but yes, I think there's a wider path now, a wider set of opportunities, which to me is more exciting.
You spent a lot of time speaking to clients over the last few months, I'm sure, about the outlook for 2025. What are they most skeptical about? What's the biggest pushback you get?
Well, valuation has been, I've been skeptical on that, quite frankly. So it's still, people are uncomfortable with the valuation in the equity markets. But then when you think about, what else is there out there? And then you look at the US versus other markets too. So that's probably the biggest one. The second one is just, it still feels unstable. Like geopolitics, the political, angst in this country is like not resolved. I mean, there's still this very bifurcated.
I mean, I kind of agree and I kind of disagree. Trump, I mean, it was a red wave. We got a mandate, right? Now, is the country super divided? 100%. But I think there still is a little bit more on like, hey, let's go in one direction. And now it's up to the Trump administration to kind of execute on that. But I don't know if that's the biggest bear case, that we're divided in the United States. Geopolitically, there are some bear cases, but then it's a question of, can Trump resolve some of these things? And if he can, then market's going to price in a lack of geopolitical risk.
Political environment. People's economic situations are very bifurcated. That makes people uncomfortable. So I think that's the part that people it's hard to get uber bullish when you have all these things that are kind of holding you back.
Do you sense that some clients, and of course you're not going to name any, but do you sense that some are finding it difficult to divorce their political bias away from their economic views? Have they learned the lesson of 2016, 17?
I mean, most clients are more objective. Investment clients are more objective about that because they have to be, right? Because there's this thing called the price that makes them be objective about the outcome. That doesn't mean they don't hold personal biases. We all do. That's natural. I do think 2016 maybe changed that a bit, but look, we're all forced to perform, and you whether it's a political bias or it's a style bias, you have to navigate that and be flexible.
Just to put a bow on this conversation, the essence of this conversation when you talked about the administration was the real potential for real change. When I asked you about whether some of these clients are skeptical about 2025, are they skeptical about anything in the administration's agenda that you think maybe they should be paying more attention to?
Well, we wrote about this weekend. I mean, there's a tremendous amount of skepticism on whether they can actually streamline the government, because it's just, I mean, people have tried this before. This is not like a new idea, right? So it's difficult. And we all know about these roadblocks that are kind of built into the system, that, the appropriations, the way you get the money that have to be spent, the civil liberties laws, which are good laws to protect people's rights on jobs. But it's almost like you're fighting against this giant blob, and people are very skeptical that you can beat the blob. And I think that's an area where we need to be a little bit more open-minded. I'm more open-minded about that, because this is what the American people want. When I forget about talking to investment clients, when I talk to people on the ground, people look at the government and they say, hey, government does a lot of great things for me, okay? But I have to worry about my job all the time. I have to operate in a different world. Why should they be operating in a different environment? I just think there's opportunity. And this is also potentially liberating for people in the government. There are really good employees in the government, okay? They just play for a bad team. It's like, let's take a good player on a bad team and let's put them on a better team, and then probably you get more productivity out of that person. I think that's exciting. It's a lot of risk. Okay, it's going to be a really messy road.
Yep.
But that to me is interesting.
I pretty much agree with what Mike Wilson's saying here, but it's incredible to kind of see his turnaround, obviously from last year. And the big thing I got from that takeaway is that he believes the earnings growth picture is now real. And Mike Wilson is still one of the most respected guys on Wall Street. Even over the past years, he hasn't been the most bullish. But when he is coming around to seeing the earnings growth picture in 2025, what does that mean? That means companies are going to have more profits. They're going to have more earnings per share, because the tax cuts will probably help them allow them to keep more of their bottom line, but B, because they're going to grow margins. And if that's the case, although he's acknowledging valuations are expensive, it feels different from 3 years ago, where not only were valuations expensive, but there was no earnings growth. Meta was $1 trillion and they were burning $70 billion a year and had 20,000 employees that they didn't need. And they weren't growing at the levels they're growing at right now. And you didn't have a renaissance of new technological innovation like AI, GPUs, et cetera, that got people to think there is long-term growth potential. And that's changing. And so it seems like Mike Wilson, Morgan Stanley, all these guys are coming around to kind of believing in that. Goldman Sachs as well had a $6,500 target along with JP Morgan for 2025. Marathon right here up 7%, Mobileye up 4%, Ride up 1.8%, Robinhood at 38.30, Palantir at 65.52 currently right now. All right, so Doge, let's get an update on Doge. We saw Mike Wilson talk about how this could be healthy for the government if we actually have some type of government commission that could monitor how much we're spending. Let's get an update on that, and then we'll talk more about what Elon's doing with this.
Welcome, Jason Prenner, Chairman and CEO of Strategas Research Partners, a Baird company. I'm fascinated by.
We'll call Kris right after this. We'll get Kris on the show. We'll call him right after this.
Good to see you. I'm fascinated by you. I'm always fascinated. But you point out that in the last 15 years, we've had a grand total of 2 months in recession.
That's right.
Which gives us the idea that we have managed the business cycle and learned how to do that, which is, we know that's impossible, probably.
Agreed.
So let's look somewhere else for why we've been able to do that. Could be perennial, nonstop QE and perennial, nonstop deficit spending, which gives us this sense that we've done it. But that all seems to be setting up for a day of reckoning, because you can't do it that way.
I agree. I feel I'm very skeptical of social engineering, and I think QE is one of the greatest sources of social engineering, or greatest examples of that I've ever seen. I think it misallocates capital, and it also makes it very difficult. Very difficult for regular people. Regular people get zero on their savings for 12 years. Where people with leveraged investments like private equity crush it. That's not fair. And I think it's also one of the reasons I feel very strongly about this. One of the reasons why Donald Trump was elected 8 years ago, because there's a general sense that these policies are not working for average people. So it looks like we've managed the business cycle, but we've been doing it with massive government deficits and government spending, which we can't afford. No one likes to see recessions. But if you believe in free markets, recessions are a necessary part of the business cycle, which resets things and allows for creative destruction and productivity.
Part of the problem is the deeper we get into this, the more people who have made big bets on never having a recession, the louder they scream anytime there's any risk of something like that, and basically demand help from the Fed bailing them out or somebody else along the way.
Amen. And it's a problem with meddling is once you start, you can't get the toothpaste back in the tube, right? Once you start meddling in the economy, it generally tends to lead to more meddling. But also, it is a very poor way of allocating resources. I don't believe in small groups of unelected people, particularly unelected people with PhDs, making decisions for 330 million people.
And I think that's kind of why he's on board with Elon and Doge coming in and trying to audit if any of these agencies or these firms are actually doing anything meaningful. All right, let's get Kris onto the show, get his thoughts on the market today. Ethereum, by the way, breaking out really nicely right here at this $3,500 level. Kris, what's up?
What's up, dude?
How you doing, man?
Good, man. Spent this weekend trying to figure out what the angle of attack would be if with this whole rally that's coming to the Bitcoin miner / future trade companies. So I was trying to figure out okay, how Like, what are the vulnerabilities here? What are the risks? What are the ways that we can keep profiting without having to take on too many losses? And just be very mindful of the risk. So,
all right, so share some of the DD. What are you thinking are the biggest risks, and kind of how do you think this is playing out?
Well, it's kind of when it comes to convertible debt has this feature in it that makes it very valuable for people trying to arbitrage. So, do you know what arbitrage is?
Yeah, it's when you try to find an imbalance between prices of two different area levels, right? And
it's more like you make money risk free. Like, if things go up, you make money. If things go down, you make a little bit of money or
right.
whatever. It could
right.
be the opposite direction. But basically, it's a way that you have a riskless return. So sometimes what happens is the market's very inefficient, and you can have an arbitrage. So, like, let's say right now, me and you are transacting, and we have a third party. So, like, I was going to sell something to Steve for $2, and you were able to convince me to sell it to you for $1.80, and then you go right there and you sell it to Steve for $2. Basically, you made 20 cents, right? So that's an arbitrage opportunity. And guys like SBF and Jane Street, they're really good at that, where they were able to find market inefficiencies where they could take advantage of that disconnect and be able to profit from that in a way that's quote unquote risk free.
So how are you thinking of MicroStrategy and Marathon? You sound tired. Are you tired?
Yeah, I'm not tired. I worked last night. I fell asleep listening, and then I woke up like about 10 minutes ago when you started talking about like just random things. So I was like, I literally got like a 20-30 minute cat nap. I fell asleep right before you rang the bell, and so I just woke up.
Because I'm asking because Marathon's up 9%. I feel like you'd be a little bit more excited, but you obviously worked last night, so you're tired. But do you think your thesis is coming true around Marathon being a smaller market strategy? And do you think there's more risks to the thesis after you studied these convertible notes?
So the key here is the longer this goes on, then more likely it is than no, because what happens is, like, you look at MicroStrategy. MicroStrategy issued convertible debt, and they were able to buy Bitcoin with it. And so now there's a floor price that's getting put under MicroStrategy stock price, right? So basically what happens is you take the assets, you minus the liabilities, that's what's going to give you your equity value. So if you look at how the Bitcoin situation works, they're buying all these Bitcoins. So if Bitcoin's price goes to 120, right, you're going to see the Bitcoin that they bought for 95,000, it's going to be worth more, right? So it's adding to shareholder value in terms of book value. The question is, why are people so willy-nilly about issuing these guys so much zero rate interest debt? And the honest answer to that is very simple. It's because they have positions on the opposite at the same time. Many of the people here, what they're doing is they're using this as an arbitrage opportunity where they're selling they're basically, selling this stock short, but at the same time they're long on the bond. So what ends up happening is, let's say the price of the underlying stock goes down by 50%. It's fine, they make their money, but at the same time, that other position that they have, which is their convertible debt, they're able to maintain that because you still owe them that. I mean, they still owe you that money, right? So the key is, if MSTR is able to keep doing this, right, where they issue more convertible debt and they use that to buy more Bitcoin, what that is doing is essentially putting a floor price under the price of MSTR if you believe that it can't go below net asset value.
What do you think the floor is right now, based on your analysis?
I don't know, because the value of Bitcoin is moving up and down pretty drastically. The key, though, is finding how much premium that they're actually willing to
Well, so let's do it. Let's do it right now live. So Sailor Tracker shows that they have 37 billion of Bitcoin on that they own. Half of that is what they paid for it, so 14 billion or whatever they paid, 15 billion. So the market cap of MSTR is at 84. So 84 divided by 37 is a 2.2 premium, 2.2x premium.
Right, but remember, you also have liabilities. So what does MSTR have in liabilities?
I don't know. I have to find out.
Yeah, so the way that you would do it is you would take the asset value that they have based on Bitcoin price, subtract the debt, and that is what your book value is.
Oh, so that gets you closer to 4 to 5x premium, I would imagine.
Yeah, so the key here is if you're able to issue a lot of the debt at low premium, but then you're also strategically buying Bitcoin, then it makes sense. Like, my biggest worry is that if the price of Bitcoin underlying drops back down like 50%, which is a real possibility because at the end of the day, this is just how it works. It's something to factor into your risk models. Now, here's the thing. I don't think that there is going to be a huge drop in Bitcoin prices that we saw, like the 60,000 going down to 10,000 in the last cycle. I think that's almost like a 70-80% drop. No, it's at least 70% drop, almost 70-80% drop. The chances of that are a lot less likely because now you have a lot more like institutional interest. You've got people sitting on the sidelines. You've got hodlers. You've got all this soft money that's basically putting like this invisible floor price. So right now, I know you said, when you're looking at the charts, you're like, oh yeah, there's a wall, right?
Yeah.
And as the wall of worry gets crossed, the value keeps going higher. The key is there's also a floor where there are so many people. Like, here's a question, like just answer this in the chat if you want. If Bitcoin dropped to $60 $60,000, would you buy?
60,000?
Yeah. Would you buy it?
I wouldn't buy a whole coin, but yes, I would. And I'm saying that honestly, just because the education I feel like I've had over the past couple of weeks, understanding Bitcoin more. Also, I mean, my plan, I said this a couple of weeks ago, 2025, my plan is to DCA into IBIT every month. But I wouldn't buy a whole coin. That's for sure.
Okay. The reason why I asked that is because once you go up to a certain like height level, there's this innate like feeling that, it can get back there again.
Right.
So once you cross a certain threshold, it becomes something of a base for you. So like let's say right now it goes from right now where it is, it goes to 120, right?
Yeah.
Or let's say it gets to 180,000. Then with that knowledge that this went to 180 and it's now trading at 60, are you more inclined to buy it or less?
So if it goes down from 180 to 60, are you more inclined or less inclined?
Yeah.
I think if you believe in the long-term thesis, you are more inclined.
No. Don't give me all the bullshit responses. What do you think?
No, if it goes from 180 to 60, I would still buy it at 60.
Well, so you're telling me right now, you're like, okay, if it went from 100 to 60, you would buy, but not like a lot. But if it went to 180 and it went to 60, you'd buy way more, right?
I don't know. I don't know what I would feel like if that happened. All I know is I want to DCA into IBIT every month next year, and that's it, whatever the price is. But I feel you. Your point is that if there's a dramatic swing to the upside or downside, people could just run for the fences, is your point.
Right. Because in my opinion, what tends to happen is once things get to a certain level, and now what that does is it puts this innate kind of like feeling into you that says, oh, well, you know what? I think this should be, like it's selling at a 35% discount. So you're more likely to buy because, you're like, and that's human nature, buy the dip, right?
Right.
So the key is once you cross a certain threshold, it's much easier to put a floor price on an existing security. And remember, all of this stuff is trading more on human sentiment rather than actual price. Otherwise, you wouldn't see a huge, massive premium that Mara and MSTR are getting.
Yeah, I mean, it's the same. If Nvidia went to 100 today, I would buy that dip. But I think a lot of people would be saying Nvidia is a cyclical business. It's over. They wouldn't buy. So same thing with Bitcoin, right? If it goes back down to 70,000, people are going to say it's worthless. So 100%, I agree. So your main fear right now, it seems like what I'm getting, is you're just scared about Bitcoin's price action at the end of the day.
Well, the reason why I wouldn't call it scared, but I'd say worried is that these arbitrageurs that are doing this, they make money when it stays below the strike of the call option that they have, aka the convertible debt. When we look at this convertible debt, we should all be thinking of this as a call option, a very, very far out call option. Which, by the way, if all those Mara people who gave that convertible debt, they're already in the money, because remember the conversion price is 26, right?
Yeah.
So the question now is, what's the next thing? And I can tell you, they're probably knocking on Mara's door saying, hey, listen, we'll give you another $2 billion. And, we'll give you a strike of, let's say, 32 or 35, and we might see that in the next few months. So we'll see what happens. But that's just the game that everyone is kind of like playing right now, where they're going long the bond and they're going short the stock. But then at the same time, it's like this weird situation that's out there, man. Like,
so hold on. I have a question. So the MicroStrategy call option convertible note is 2029 $672. Let's say MicroStrategy is at $1,000 by 2029. The convertible debt issuers, do they make that extra money above the strike?
Yes, they do, but they're also going to take losses from their short position.
But how do you know they have short positions right now? Like
because that's how the game is played. Where do you think they're just getting that $1 billion from, or that $2 billion from? You think they're just saying, yeah, let me just give these guys like this money and hope for the best? Like, no, dude.
I think that's what they're doing.
No, man, no. There's some portions of it that are doing that on the active side, but no, the way that the convertible debt is happening is they're shorting the stock, they're going long the bonds, and they're playing this game in the middle. So the question is, I don't know where the floor price of these things is going to be, but we'll see what happens.
Yeah, you're right. We got Josh in the chat saying they shorted on the way up with delta hedging. There may be some people that are just holding, but most will delta hedge. That's it. That's a new point to think about. So they will be losing on their short position, but they don't care because if they're net long, they want it to keep going.
Yeah, it's fine because they have a long position on the convertible debt side, so it's fine. I mean, but the key is the value of the underlying is going to be very hard to determine, and because remember, you got two factors playing against each other. You've got the value of Bitcoin, which is the underlying asset, and then you also got the premium of the stock at which is currently trading. So, like I said, these guys are mathematically trying to basically engineer a good return without taking on a lot of risk. And I don't know, like I have to do the math. I keep running into like roadblocks in the math wise, but I can say safely that Mara is still good. It's still going to keep running in the short to medium term. I am more likely, like once it hits certain price levels, to take some profit.
Yeah, so can you tell people on that? Because you came on, you made a good call at 19. A lot of people are curious, when are you thinking of exiting? Would you exit now? I mean, you're up. People, if they got in, they're up like 30-40%. So what is the strategy on exiting Marathon?
It's going to be a little bit. Like, I'm trying to figure that out myself right now. Like, there's no 100% like solid number that's coming to mind that like, okay, this is the floor. I'm going to definitely sell at this price, because even I'm like not 100% like certain like what the hell is going on. The rate of change I was not expecting it to ride up this hard, this fast. Congratulations to anyone who thought it would, and basically you're living the dream right now. But yeah, I like I said, I'm still trying to mathematically figure this out from my end to see like, okay, from a risk standpoint, where do I stand with this?
This is funny though, because when you called me at 4:30, you were like a kid in a candy store when you found this opportunity, and now it's superseded your expectations, and you're kind of just like, is this like still gonna keep going forward? So it just shows you the dramatic volatility that it's had in the past week.
Yeah. No, I mean, dude, it's up 56% in 5 days.
Yeah, it's pretty incredible.
So the thing is, you have to, like I said, a lot of this is math and the mathematical models that which these guys are looking at this arbitrage opportunity. Because I mean, at a certain point, it'll also be detrimental to them for it to go below a floor price.
Right.
So this is one of those things that you have to kind of like figure out. hey, look, this is a floor price. This is the max price. And you know what? Every time they do this new convertible debt offering and like the value of that new convertible debt offering, the whole equation changes again, you know? And then you also have to factor in the underlying value of Bitcoin. So it's like, okay, what does the prediction model say about Bitcoin price in 2025? Like, where should it be then? You know, so it's like I said, it's definitely a speculative bet that these guys are making on the other side to get these guys basically to make some money on this thing. But it's definitely weird to see. But from my understanding, risk to reward standpoint, there will be a time where I'm going to start to shave down my gains and basically take that money, dump it into fixed income. And I'm telling you, that's and everyone in the chat, this is my advice to Amit. Anytime I get a chance to call him, when you win, take some money off the top, put that thing into fixed income. So this way, let's say the market completely dumps tomorrow. You still have an income coming in, and that income is what gives you this suit of armor in any market conditions. When you have an active income that's 100% passive, that you don't have to worry about a job, you don't have to worry about X, Y, and Z. So everyone needs to eventually get that suit of armor. For me, that suit of armor is about $250,000 a year. If my entire equity position blew up, but I still had 250K coming in passively, I'm happy.
Yeah.
You know? So, and that's when I can take more risk. And that's the thing. Like, we have a friend, mutual friend, who's also in the Mara position with us, because it's freaking Adam. Why am I even trying to hide it? Adam's in it with us. But let me tell you, Adam's smart. He's playing this exactly like he's supposed to. He won. You know, he did really well with MicroStrategy, right? He's doing well with Mara. But I know him. I've spoken to him. He's like, yeah, I'm taking the money and putting it into the stuff that I know is just the long-term winners. I'm not going to keep speculating for the rest of my life and you know, hope that I can keep swinging the fences.
So Kris, how about we do this? Are you free on Thanksgiving or Black Friday?
I might be.
Because Steve and I were going to do a dividend episode. I think you should join and talk about fixed income, and that could be like a really good episode if people have profits from growth stocks this year, how to diversify into fixed income dividends.
Yeah, and also which vehicles you should buy some of these dividends and all the other things too. Like, because it's never as simple as just buy this thing, everything is going to be great. Like, no, you have to.
Okay, so we'll set up that pod, and guys, we'll do that, and you guys can get more of Kris's thoughts on fixed income. Real quick, Kris, I want to read you a tweet by Jason Calacanis, who quote tweeted MicroStrategies, Michael Saylor, and I want to know your thoughts on this tweet. So JCal says, so you're taking out loans against your Bitcoin holdings in order to buy a lot more Bitcoin, which lowers the supply of Bitcoin, which makes Bitcoin go up, which makes the stock go up, which creates a gap between the Bitcoin holdings and the corporate valuation, which is like 4 to 5x, which makes folks short the stock, which is what you were talking about, which creates a short squeeze, which makes the stock go up, which makes the gap between holdings and the valuation go higher, and allows more loans against the stock. Jason is being sarcastic here, and he's saying this is innovative, but obviously he thinks this is going to be a house of cards. What is your response to kind of how he thinks of this?
I mean, it's not wrong. It's just basically they're digging into more and more leverage. Okay. And at some point, the leverage game does not work. All right. Because eventually someone's going to call bullshit. Now, there's one earlier comment that you had, like, you don't care if dog with hat is on Robinhood. And while I agree with most things you say, that's the one thing I didn't agree with, because what I tend to see is people get greedy. People do things and they buy things that have no real value, and they keep pumping things up, and eventually it becomes a systemic risk. And the thing is, once it becomes systemic and a lot of people are impacted by it, it ends up causing a lot of stress all around the economy. And then we as the government and / as the people, because, you know, our taxes are going to pay for it, are going to end up having to bail out this risky BS. So it's almost like right now, let's say all these people are looking at Bitcoin. They're like, oh my God, yeah, I'm going to buy Bitcoin. This is going to be great. And you have people at the lowest levels of the economy all getting into these speculative trades and getting into speculative investments. And if they all start to lose money at the same time, now you've got an economic calamity just waiting to happen. So unfortunately, we have to remember that as humans, everyone's got greed centers. And the more you allow those greed centers to kind of keep getting flared up, you're also taking on a lot of systemic risk. I mean, it's like the same concept, and I know it's a libertarian thing to say, like, hey, you know, we should, like, let's say hardcore drugs. You think we should allow heroin? Like, anyone who wants heroin, it's their personal choice.
I mean, dude,
let them
I do blow every morning before the show. That's how you get this type of
I
energy.
wouldn't doubt it. I wouldn't doubt it.
No, I'm just kidding. But no, I get your point, Kris. I just fundamentally disagree, because then you could say Robinhood shouldn't allow SMCI because that's too risky, right? And I hate that bright line. They shouldn't allow MicroStrategy because that's too risky, right? But
there's a lot of key differences between dog with hat and SMCI.
not really.
Like,
there's what's the difference between Palantir trading at a 60 times price to sales and
it's
a meme
not that.
coin?
It's not that.
You could say valuations are crazy for anything, though, right? That's my point.
It's not just valuations, but it's also reporting. Like right now, when you have a company that's listed on the NASDAQ, listed on the S&P 500, all these other indexes, there's reporting requirements that what are the insiders doing? How is the company making money? How are they losing money? You know, there's all of these disclosures so that people en masse can at least get an idea of what is going
But Kris,
on.
Kris, Bitcoin has no disclosures either. So why
right, Bitcoin doesn't, but the other companies that we're putting our money into, like Mara and
No,
MSTR,
I get it. But why should Robinhood not allow dog with hat, but allow Bitcoin?
Because there's no reporting. All it is literally speculation.
No, I get it, but
parties.
Bitcoin has no reporting either. So why should they allow Bitcoin?
I mean, that is a pretty fair point to make, to be honest with you. I mean,
I just think the bright line gets really tough when you try to say Robinhood or Coinbase shouldn't allow people to do something. I get your point about retail traders losing money, but you and me were retail traders who lost money a lot years ago. It's kind of, you go through the process and you figure out how to not be an idiot, right? Like,
yeah,
part of the game.
Yeah, this is one of those unfortunate realities that we're all going to have to kind of like deal with in the short to medium term. Like, this is a brand new world. Some of it's dictated by math. Some of it's dictated by human psychology and emotion. It's just like I said. I feel like the people who do engage in a lot of the more speculative meme coins, they tend to lose a lot more than they gain. And the thing is, they're usually at the bottom end of the economic spectrum, and it really is sad to see that, because there's so many people that come in and rug pull these guys, and it's usually people with some high level of influence that get people to do stuff. So as an example, the Logan Pauls and the Jake Pauls of the world, when they started doing crypto punk, like even Mr. Beast is caught up with this whole crypto punk nonsense.
I agree with that, but there's also a lot of people making a lot of money on these meme coins. You know, I feel like it goes both ways, but I do agree. Retail gets caught up in it and they can lose a lot. Kris, last question for you then.
Even the rich are stupid, bro. Like, did you see the freaking auction? Where I think there's like $6 million for a banana taped to the fucking like wall.
Well, that's obvious money laundering. I think that's obvious, right? They're just trying to hide some money.
I know, man, but it's retarded, dude. It's whatever.
Okay, so last question for you, because I know you got to go. You definitely got to get some sleep. Palantir got upgraded to 75. Any thoughts on that?
I have no comment, man. No comment.
Nothing to say to Dan Ives and Mariana?
Nope. No comment. No comment.
All right, Kris. Love you, man.
Have a good one, man.
We'll talk to you later.
Bye.
All right, folks. There you go. I had to ask Kris. I had to ask him. I think at this point he's just given up on Palantir being undervalued, overvalued, whatever it is. But yeah, look, ultimately I agree with Kris on this leverage thing, and it is a lot of leverage, and a lot of that leverage can go up or down. Marathon right here up 7.4%. But I disagree with him on the Robinhood listing meme coins thing. Like, I think we got to have a free market, and if people want to lose money in something, that's up to them. But if there's enough demand for something, then that's just up to people to decide if they want to do it or not do it, right? But yeah, I think on Black Friday, Kris, Steve, and I will do a nice fixed income dividend stream. That'll be a good one. And we'll get to spend a couple hours really kind of determining what a solid, diversified fixed income strategy looks like going into 2025, especially if you have some profits from growth stocks. And that'll be a fun one. That'll be a good one for me as well, just to learn. Rocket Lab right here, $24, up 3.65%. And you got Tesla, I think, trying to come back a little bit right here. Tesla 353, up about 1/3% right now. All right, pretty cool. Got a lot of stuff that we got going on in the markets. Tomorrow is going to be a big day for earnings. I'll be back on the market close later today. Tomorrow, we got Best Buy, Macy's, Abercrombie, Dick's, Burlington, Smuckers, And then after the close, we have CrowdStrike, Dell, HP, Workday, Autodesk, and Nutanix. That's a lot of stuff happening tomorrow. And then we are pretty much done with earnings, I think, for the year or for Q3. Well, yeah, basically for the year. And then we got Thanksgiving. And that's it. And that is it. NVIDIA bouncing a little bit. Do we have a little bit of a bounce on NVIDIA? NVIDIA 138 down 2.4%. Palantir right here, 65. NVIDIA, a little bit of a bounce from 137. Hood holding 38 really nicely, guys. 38.49 is just amazing strength. Incredible momentum on Robinhood. 38.49 up 5.4%. MSTR still down about 2%. Marathon 28. Bitcoin 96.3 up from 94. And then you got the S&P 500 at 598.31 currently right now. All right, cool. That's it for me. Thank you, everybody. We'll be back. Market close 3:45. We'll see what we got going on. And then tomorrow we have a ton of earnings that we'll be looking at as well. Daily Palantir episode later today. We'll be talking about the price target upgrades and this NHS stuff that has started to become much more important for Palantir in terms of the results they're showing to some of these clients. Word of the day. Let's do word of the day. And then we'll be done. Word of the day is munificent. Munificent.
Munificent.
Extremely liberal and giving. Very generous. The billionaire was known for her munificent donations to local hospitals. His munificent gift to the charity allowed it to expand its programs to help even more families. Well, munificent. There you go. Very generous. I guess you could say Bezos is very munificent in paying capital gains tax because he's selling so much Amazon that he's very munificently giving money to the government on those capital gains. But yeah, the Bezos wall hopefully is gone. And we're going to get back above the 200s. Amazon, real quick, looking at that one right here. 200, it's up 1.7% on that Bloomberg article of Amazon getting taking a little bit of NVIDIA's lunch right here. S&P 500, 598.15 currently on the day. Palantir 65.32, Robinhood 38.38, Tesla 354, Palantir 65.30, S&P 598. All right, that's it. Thank you, everybody. See you back on the market close. Bye, everyone. Have a good one.